And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the stock markets, commodity markets, anything in the financial markets, break down the news, the action, the information, and kind of help you guys out there understand what's happening with your daily routine while we're running ours as well. I got a full crew here today, second day in a row where the markets are down, actually trying to make a little bit of a recovery here intraday. We're going to break down all of the charts and what happened. Payroll numbers came in, the monthly payroll report, first Friday of the month. As always, we'll get all of the guys' analysis on that data as well. But I think we just got to dive right into it and start with the technical trends. We've got Coach Gino, Coach Frank, Coach Mark, Coach Matt, myself, Tim, and Cody on the back end producing. Matty, pleasantries to start. How you doing, sir? And Matt is on mute real quick. Frankie, there we are.
Hey, always good to be here. Interesting couple days in the market for sure. You got it's led for some interesting looking charts. Holding support right now. We'll see if we can hold it into the close.
Yeah. Matt, what's your read on this? Obviously, I mean, we've been talking about the market momentum for quite some time. You and Mark broke down the analysis yesterday when markets were selling off and how there just really wasn't a lot of support until we came down to some of these locations. 3,400 on the S&P was one of those levels that you were eyeing and talking about. How are you reading the price action here today on a Friday, Matt?
You know, it's kind of like we talked about yesterday, that this may be the new norm. And I don't think we're ready to call it that. But, you know, even Frank, when we were in the pre-production show, basically said the same thing. He's like, you know, this might just be what retracements are in this current cycle, where they feel very, very violent. They feel like something major is happening. And then they find those daily support levels, and, you know, it's back to action. So I think we're still in the middle of that, trying to figure out exactly, is this, I think the ultimate question, is this that buying opportunity, or is it something else, right? And as of right now, you got to say it's still a buying opportunity given the depth of the trend and the strength of the trend over the course of the last few months. But we're at one of those, you know, precarious moments in the market where it better hold. Better hold here.
Yeah, I mean, it doesn't surprise me much. It's like that first bounce, right? And you see it on the Qs as well. So you see it on the NASDAQ, and you're seeing that old breakout level. And this is a trend that has been going on for months and months now, that it breaks out and you test. Breaks out and it's test. And this recent run the last month has been so strong, you haven't had that test yet. But that was very, very, very common in the previous months. And so you get that first clean bounce off of 3,400, off of, you know, pretty quick relative bounce. That's not surprising because that is a known old resistance level. And one of the key concepts of technical analysis is old resistance becomes new support. You're seeing that on the Qs and the NASDAQ as well, the old breakout level. So this is happening everywhere right now, a bounce off. Now, if support holds, well, that is an encouraging sign for bulls. If it doesn't, well, we're looking at a much deeper pullback.
Well, and I certainly think that as well, Mark, that if we do not hold at that 34, and the early signs are so far, it's trying to hold, right? It's trying to hold. And it's been impressive to a certain extent to see the strength of the upward movement in price really really since the cash open. You had a lot of blood coming into the European markets, a lot of selling off coming into the overnight action. And so it's been impressive to see the strength of the rally since the market has opened. I mean, you're up a good, you know, what are you up? You're up a good, you know, 50, 55 points since the cash open. And so you are seeing that recovery. But again, I come back down to the 30-minute chart. And when you broke this intraday support level basically earlier today, you broke that and then you're trying to recover. But as of right now, you're still seeing this as a bearish retracement on the intraday perspective. Until you can get back up above that pivot right there at 34.20, 34.25, you're still looking at this as the downside movement in price. And so the initial movement we've seen in the last hour and a half, it is positive, but as of right now, you're still seeing that as a bearish retracement from an intraday, and it's got to reclaim some of those, you know, some of those overhead intraday resistance zones right there at 34.20 by 34.25. for you to start thinking about a true recovery.
Yeah.
If you don't see that hold at this point, you got to see some type of double bottom. So I don't think you should just rush out and be like, oh, we're seeing some good action in the last 30 to 60 minutes. Yes, we are. But you still haven't reclaimed some of those moving.
Oh yeah, no, yeah. This thing could absolutely spin out of control still. Make no mistake about it. I mean, we've had a test of the old breakout level, and it is very, very, very tenuous. You know, this could go a lot of ways right now. And you know, when I look around, it was hilarious watching CN. I love CNBC on bear days. I really do. I find it great theater.
Right?
As they're like, why did it sell off, and what does this mean? And it's like, oh, it's just retail, or it's just algos, or it's just valuation, or it's just nothing, or everything's just fine, or I mean, they just had zero idea. They had zero idea, but they're trying to give those words of encouragement, right? That it's all good, right? So,
well, you can point to one of those 55 bullet points you had in the newsletter this week, this past week, and say it was one of those. But here's the reality, guys. You haven't had a lot of negative news the last 2 days. There has not been there hasn't been a geopolitical movement. There hasn't been a delay in vaccine. There hasn't been a, you know, terrible economic report. And we'll get into the labor numbers here in just a little bit. But you haven't had a major, you know, bearish catalyst. You had a technical support level get violated for the first time on an intraday perspective. And the market, just that alone, the market spun out of control a little bit.
Mm-hmm.
It's those types of price movements you see when you don't build any true support levels moving up. When there's nothing on an intraday perspective and those intraday support levels get violated, man, it's going to be a tough haul. You're going to see it. You can't have, and I said this yesterday and I'll say it again, you can't have it go up as fast as it has,
Right,
and then be completely and utterly shocked when we see a couple of shakeout days.
yeah, that's it. And real quick, Matt, to add to your point, don't forget how good the market's been the last couple of months, right? I mean,
Sure.
It's been very bullish. I've been calling this a breakout market. Why? Because as you know, when we look for our screeners and our scans, we've been finding breakouts. Now, technically what that means is stocks hitting new highs, stocks breaking through their highs. That's why we call it a breakout, and hitting higher numbers that we've never seen. A lot of record highs on stocks just last week, right? We've had a long trend of this happening where we haven't seen many pullbacks into a support level and then rally, which we call a swing. This is more of a swing setup than it is a breakout setup going into next week. Yep. So what that means is we stop hitting new highs and there's panic. People are like, what? My stock's not hitting new highs? And where have we seen that? We've seen that in technology mostly. The stay-at-home stocks, the 5G stocks, the semiconductors, the high flyers, the news-driven ones. So when they pull back, it's going to be a decent pullback because that's what happens on breakouts. And so will we hold support levels? So we're coming out to what I labeled a breakout market. Could it cause enough fear to actually turn it into a bearish market? You know, I did get a couple of warning signs this week, last couple of days that, okay, this is a decent pullback, be careful. But all in all, when you think about it, the big move down in the NASDAQ this week, which was huge, we're still up 28% for the year. You know, if you think about that, that's phenomenal for any year.
Mm-hmm. Yeah, no, it is. There's no doubt about it. But the 2 day sell off here obviously is very impressive from the bear side of it. You know, one thing that we've been talking about for a week or two almost, Mark, you brought this up several times during this halftime show. You were waiting on a day like this. I mean, you actually kind of called this a little bit. You were waiting on a day or two like this that you would see this. What was your instinct? What were you seeing there? Help people understand that.
All right, so and I called it a shakeout day. I mean, for a couple of weeks, I've been saying, "Hey, we're gonna have a shakeout day. We're gonna have a shakeout day." You know, and you just never know when it's gonna occur, right? And it's one of these times when you see frothy, like absolute. I mean, the market's been a little bit insane, right? It's not built on fundamentals; it's built on liquidity. It's built on a belief in the Fed. That's what it's built on. And those are things I believe in. But that doesn't mean that like these frothy conditions carry with it on your average trader investor fundamental value, fundamental conviction. But even more on top of that, that's more of an exacerbating condition. Whenever, and it is this simple, whenever you have rises up and good support levels don't form along the way, algos they just don't care. They don't care. It doesn't take much when you don't build support up and when you try to get ahead of the game, it doesn't take much for algos to flip. And so the more rapid the climb, and we've seen this in so many numerous stocks, individual stocks along the way, that if there's no support build up from a technical point and the run's too big, and then you have a day in which it just flips, and algos flip. And then because there's no fundamental conviction and because people have made money and quickly turning in, taking profit at the first sign of real trouble, it was set up nicely for a 1-2 algo flip. People take profit, algos continue environment. Nothing's really changed in the big picture, as Matt alluded to. There was no news event, right? There was no, that would scare me a lot more if something had happened. It's like a lot of the people that watch today were not watching back in January, the halftime report. When COVID hit China, we were all over that. And we were like, this is very concerning. This is very concerning. This is very concerning because it was an actual event and you had still kind of frothy conditions, but it was an actual event. This doesn't worry me as much in the long term. Now, if something came next week in an actual news story, it could certainly exacerbate it. And it doesn't mean we can't go lower. But this is not like a COVID type event, in my opinion. But it was easy to see coming. You just didn't know when it was going to occur, if it was going to occur this week or 6 weeks from now. Just algos flip. And when there's not support levels build up, algos and a lack of fundamental conviction by the Dave Portnoy, cult clan out there, it just is ripe for these conditions. So
yeah, I agree. So the theme is from what you said and I said, breakout to shakeout. Just had to do the plan words there.
Break out the shakeout.
Break out the shakeout.
Yeah, I did that. See how I did the little plan words?
I like it.
I have no idea what it means, but
It sounds good.
The alliteration is nice.
Into a shakeout. So when you do hit new highs like that, a shakeout would be if we turn trends and go down. So that would not, that wouldn't surprise me, but it's amazing how fast we could go from a breakout market, which is very, very bullish, new highs, to a downtrend that quick. But it's happened in the past. And like you said, Mark, it's always been some kind of catalyst, some kind of major news. You don't get major downtrends and sell-offs on no news. It's like, unless there's a better investment.
The last major technical sell-off that we had, if my memory serves, in which there was no news, was October of 2018. But it was a different pattern. We had broken through support but it was the same concept. We had broken through like multi-week support. And you got into a situation, and if you pull up the time period, it illustrates it nicely. But in October of 2018, whenever you are lacking support, whenever you are lacking a space on the chart where support doesn't exist, then there was that day right there, that day right there that is being highlighted right there at the start of October. There was a massive, huge down day because there was really no support. And then that turned into this violent multi-month downtrend. But the day in early October, no news. In fact, I remember talking to Tim and we're talking about the sell-off and it's like, there's no news. And I was like, yeah, and there's no support. So, it's one of the things that technical analysis can really benefit you.
Yeah. You got to look at those sell signals because who thought it would be that big of a pullback? I remember that quite clearly because I had to get rid of a bunch of bull put credit spreads and iron condors that are in the money. I'm like, what? This isn't right. This is too big of a drop for this. And then it rallied back and hit my credit spreads on the call side that quick. Now, looking at that, I'm chalked that up. My reasonality for that was, it was the late seasonal sell-off. And that was the next thing I was going to bring up is if you look
Guys,
at
that was Fed.
Mhm.
That was Fed.
that was
The Fed
Fed.
indicated
Yeah,
they
that
were
was-
raising interest rates in December of that year.
Oh,
No, yeah,
great.
no,
That was the Fed day.
but the day of October, in the early October itself, there was no news that day.
Well,
There was no-
I know, but I guess I see it a little bit different here, and I do agree with the overall premise, Mark, especially in this market when you violate support for the first time in a trend that doesn't have strong support, it is shown to see a little bit more volatility there. But I got this more as it's selling on good news, guys.
Mhm.
I don't feel like it was just a lack of bad news. I think this is selling on good news. You had good European news this week from an economic perspective outside of what we saw in Spain, but PMI numbers were good. Asian PMI numbers were good. US PMI numbers were good. And if you believe the labor market numbers on especially today, you have to take that as a little bit of positive today, even though I don't believe in the labor numbers at all, especially after the reading of this week. They're modifying it on Wednesday and then, or excuse me, yesterday. And then obviously, we'll go through the labor numbers today, but I got this selling on positive news, guys. This to me feels very simple. It feels to me that the economic data is getting to the point, and this is a problem because the economic data is being manipulated. But the economic data, if you believe all the numbers in the economic data, the data has been fairly positive, which does remove some of the immediacy of fiscal stimulus. And what do we know drives this market more than anything?
The Fed and stimulus money.
The Fed and
The money
stimulus.
inject. Yeah. Yeah.
And so this really feels to me like we're entering into that good news is bad news and bad news is good news type market condition.
Mhm.
Now, will you explain for, because you may be absolutely right, and if that's the case, that's actually terrifying, to be honest. Will you explain the premise of good news is bad
The
news?
premise of good news and bad news is a premise surrounding the belief in the importance of monetary and fiscal policy to the marketplace. And so there have been multiple different times in this latest edition of the market cycle where we were talking about some degree of methodology change at the Fed from a monetary policy perspective, primarily to where if the economic data was good, the market would actually sell off because that would indicate the Fed would be, would modify their extremely dovish monetary policy. And so every time we saw good economic news, the philosophy was, well, the market's now going to go down because it's going to lose some of the belief that the Fed will continue to, continue to support the market. Now, what transpired during those timeframes is the Fed didn't capitulate in those capacities. The Fed modified what they viewed in terms of their inflationary and mandate. If you've been around the market for any time in the last 10 years, you remember those markets where we were doing QE infinity, or we were doing QE1 or QE2, or we were doing some repo actions or some bond buying of some capacity, and it was a very aggressive monetary policy. But all of a sudden, you got the labor numbers came in at 5%, and the Fed then changed it. Tim, you were there complaining right there with me.
Mm-hmm.
The Fed would then change, saying, well, no, now that we've achieved 5%, now we're going to go to 4%, and then the more positive the news came out, it was like, oh no, not at 4.5%, 4%, 3.5%, 3%. And so the Fed constantly modified their projections to fit the news cycle that was happening. But in those moment conditions, the philosophy of the market was, oh my God, the Fed is going to remove the number one reason to buy here. And if the Fed removes that number one reason to buy, well, this party's over. And so as you started seeing good news happen, the market started selling off, which became very concerning for the broader based market conditions, because if you remove that one catalyst, who's the buyer? If you remove the Fed, who's the buyer, right? And so with the positive news, and this is a double whammy approach, because I do believe, and I don't want to put the tinfoil hat on, guys, but I do believe these government economic reports are being widely misunderstood. And if I wanted to go a little bit more cynical, I would say they're being widely modified and manipulated. And that's hurting the overall philosophy, that because the economy to me has not improved that much. The market has, but the economy to me has not improved that much. And so as you're modifying the way we see economic reports to make it look a little bit better than they are, that's fine. It gives this mistaken belief that the economy is doing better than it is, which means you remove the stimulus from the economy, which the economy really needs and the stock market doesn't. It is a weird philosophy, but we've seen it play out in the market multiple different times. And so the last 2 days did really remind me of the good news is bad news and bad news is good news type historical markets. And we've seen them 3 or 4 times in the last 10 years.
Mm-hmm. Was the jobs number here today, Matt, would you call that good news, good data? I mean, how are you? Let's go through those numbers right now, because that's obviously the one story of the day. I do want to get Frank's take on the technicals here as well, once we start breaking that down. But would you view the 8.4% unemployment as good news? Would you view the gain of 1.37 million jobs?
That's the thing. If all you do is look at the actual unemployment rate and you see it go from 9.8 to 8.4%, you gotta say that's a positive type movement, right?
Mm-hmm, mm-hmm.
And in an environment where we are negotiating from a government level the depth of the stimulus that they're looking to put into the economy and thus also aid the stock market, you see this number and you say, okay, jobs are coming back much quicker than originally anticipated. Do we still need the stimulus to the same capacity that we did before this number came out? And so if all you do is look at the number and you say, okay, maybe if we just give it a few more months, we're back up and running, right? We're back up and running. And this is the problem, is that, you guys, if you think our government officials have any depth to them in any capacity, good luck to you, because I guarantee you they don't know how to read the labor numbers that came out today. They do not know how to read the labor numbers. They see it come in at 8.4% versus last month at 10.2%. They don't even know what the expectation of 9.8% even means. And so when you see that, and then you see it in the headlines being like, oh, the economy's back up and running, the economy V-shaped, the economy did this, the economy's doing great, the economy's doing fantastic. Well, don't you also have to ask the question, does the economy need $2.2 trillion in additional funding money? If everything's V-shaped recovering, well, do you need that type of stimulus to really kind of continue to boost the economy if corporate America is doing it for you? And so that removes some of the pressure on the government officials from going out there and doing a stimulus deal, which the stock market craves more than anything, is new money coming into the system. And so that kind of removes that, and thus we have the good news is actually bad news. Now, the problem is when you actually dive into the detail of the labor numbers today, and I want to get Gino's and the rest of the coaches' take on this. I got the participation rate increasing 0.3% to 61.7, which is still 50-year lows in terms of participation rate. The actual labor numbers came out today at 8.4% versus the expectation of 9.8%. That takes into account a couple different things. Number one, we are not tracking. Let me identify the things we're not tracking in those labor numbers. The 7 million people that are no longer getting unemployment benefits because they were removed on August 30th. Remember that August 30th deadline that the government failed to, push the stimulus package?
Sure.
Well, those people were receiving unemployment benefits because they weren't in the labor market, and they hadn't been in the labor market for some time. Well, now that you remove those people from the labor market, you're now no longer counting them in the unemployment numbers, despite them still being laid off. Okay. These people, it's 7 million people. They are looking for a job, but don't meet the parameters to receive unemployment benefits. Okay. So that's 7 million. There's also 24.2 million Americans that are in some degree of furloughed right now. that are not that are also not being counted in the labor market numbers either. So we're talking upwards, guys, of 30 million Americans that are no longer being counted in labor market because of either furloughed status or because they simply don't meet the parameters to receive those unemployment benefits. And so when you look at the detail behind the labor market numbers, you see the increase, the decrease in overall unemployment, but it's more because we're changing the goalpost. It's more because we're changing how we categorize the labor markets than actually the labor market actually improving. And a fourth of the entire gain of labor market numbers this month, a fourth of them are government seasonality components, which, if you guys remember, we just removed seasonality from initial claims, but we're including them. Somebody help me understand this logically. Let's remove seasonality from initial claims, but let's count them as employment in the actual labor numbers. And that represented 298,000 of the new jobs this month were not just government. That was 400,000. 300,000 of them were census workers that are conducting the 2020 census. So somebody help me understand what's going on here.
This is like the traders that brag about their wins, but never tell you about their losses. That's what this is. Everybody's like, hey, this is bragging about wins and never
But again,
talking about
here's
losses.
the problem. This is being politically manipulated to a certain extent, in my opinion. And when we're talking about real Americans struggling out there, these numbers do not add to the conversation of the necessity of stimulation. And so when you're looking at, and I'm not talking about it from my political belief system, I'm talking about it from the actual why the market is down on good news, is because you're not going to see the need or the pressure that politicians need to fill for them to actually do something. And so I think what you're seeing over the last couple of days is the market showing you that, oh my God, we might not get stimulus here.
Mm-hmm. Mm-hmm. Marky, how did you react to the jobs numbers? I love the way Matt's breaking that down. And obviously the census workers getting jobs, we applaud that, but the data inconsistency, Matt, is got to be infuriating.
Listen, I've stopped caring about data numbers coming out of the United Communist States of America. So, it's just irrelevant in trying to predict anything, and it's manipulated. Listen, it's a bad situation out there, right? Bankruptcies, unemployment, and not just like this seasonality stuff that the powers that be are trying to fool the American people with, but big companies laying off people everywhere. Those are permanent job losses for the next year or two. It's a bad situation out there on the unemployment market, no matter how they try to manipulate the data or try to spin it. Now, it still can be a market moving event, right? Lower unemployment numbers. And this is the big takeaway for me. I look at the headline number and I'm like, that's less impetus for Washington to do anything, right?
Mm-hmm.
It's like, hey, it's getting better. We don't have to do anything.
Right.
So that's the big concern I have because this market is entire monetary and fiscal stimulus. And if that doesn't come through, eventually there's a day of reckoning. Maybe the day of reckoning's already arrived the last couple of days. I don't know. But that's what's fueled this market for months and months and months. Why do you think Target had such great numbers? Why do you think Home Depot had such great numbers? Why do you think, those big box retailers had such great numbers? Because people were giving because Americans had more money than they did before the pandemic. And I go back to the JP Morgan, CEO Jamie Dimon's statement in this last earnings, which was not really covered by the broad market. I thought it was brilliant. He's like, this isn't a normal recession, but eventually we'll feel the pain.
Listen, this to me is the market throwing a temper tantrum because the probability of them getting fiscal stimulus has decreased. And so the market is throwing a temper tantrum to hopefully daddy comes and saves the day, called J-Pal. So if the government, i.e. mommy, isn't going to save the day, then J-Pal is going to save the day because the market's throwing a temper tantrum.
Mm-hmm. That temper tantrum, though, I mean, you have to deal with it as a trader, and obviously the 2-day pullback as it's developing, Matt. I mean, it creates a lot of different actions that I think people have to consider taking here today. Adding to new positions just because they've pulled back seems like
just wait,
a
Tim.
bad idea.
Just wait. Just wait for Daddy to come out. Daddy's coming out, and he's not going to teach anybody a valuable lesson. He's not going to teach anybody a principled moment.
No,
Daddy's going to come in, and he's going to pat it down. He's going to be like, "It's okay. It's okay. It's okay.
It just got real weird in the last.
We got you."
Right? I mean, all of a sudden.
Listen, you know it's bad if Gino comes in and says it's got weird.
That's true.
All of a sudden, we're Daddy and Matt changing his voice. What's going on?
Daddy's going to save the day.
Listen,
You know what's weird is we're not going to see Cody in a grass hula skirt in a long time because there ain't no luau's, Cody. There's leisure service looking at these numbers. There's no big events, man. So, put your luau skirt away, buddy. Looking into the numbers real quickly before we get into those, check out what Mark said was interesting, the news and stuff. As a new trader, I really had a problem. Like, how do you guys know all this stuff, right? I mean, how do you keep up with it all, especially if you have a 9 to 5 or even want to keep up? There's a lot of stuff out there. It's like, what news is driving the market? But the point is if you turn on CNBC, then that's why we do it, because you think they're going to tell you the news, and they're going to, fluff it up and give you some reason, or else they're not doing their job, right? Because they're supposed to give you some story. But what a trader needs to look at is, what's the bottom line? Okay, news, no news, in-depth numbers, bad numbers, communism, lying, politics, whatever. What spooked me this week was our indicators, the pullback and stuff like that, is technical signals. And one that stood out was, if you look at the VIX, we talked about this yesterday and the day before, there was a massive spike in the VIX. There was a massive spike in option prices, which means we're at fear levels. So we're expecting volatility. Whether there's no news or not. And sometimes there's news we don't know about that comes out after the VIX spikes. So maybe it hasn't come out yet that we don't know, because the big money that does know the news, they prepare ahead of time. But that's no joke when you look at the VIX levels right now. And even with the follow through sell off today, the VIX is actually doing better. It's recovered. It's taken a little bit of a breather, but it's still expensive options. The option market is still pricing in volatility. So we're sitting at what level right now? 34?
33 and a half, 33.
Yeah, we got up to almost, what was the high?
I hit 35, something like that.
So
yesterday.
I got to ask the question on the VIX. I need some deep analysis here. Why is the VIX slowing down as the market is speeding up to the downside?
You have these moments where, when things are spinning out of control, the VIX spikes, and then it ebbs into this range. Even as long as the market is ranging in a short term. So
I hit 38 today. 38 is, that's like, so what that's saying is you can expect a 38% move in the market.
I promise you, if
anybody else want to make something else up on the VIX?
So
yeah, the VIX is simply telling you.
Oh, Gino took the bait.
No, the VIX is a mathematical formula. It's simply taking the at the money strangles on the S&P. That's all it is, which means your range right now is 30.
If your math is 2 + 2 = 48.5.
So there is a lot more premium on the options, a lot more premium. If you look at the out of the money options, you could get way out of the money. They're expensive options right now, and they're definitely twice as expensive as they were last month. So that they're just telling you now, why are the options expensive? Because people are buying them. So they go up, and it's on the protection side, but it's mostly on the puts too. Because when you look at the volume, there's a lot more puts being bought than calls. So there's fear there. And that lets you know the VIX is front looking, the implied volatility. So this means we could still have volatility going into next week.
Correct. I mean, and volatility is spiking. There's no question about it. But just because the VIX is up, let's not start calling for a market crash. I mean, back on the market here for. Go ahead, Gino.
If there's a market crash, then you'll see the VIX start going up higher. Now that the S&P did find a little support intraday and did lose momentum to the downside, we've actually done good the last hour on the market. It found a bottom and then started rallying up.
Yeah.
Not the
I
last
need
20
to play
minutes, though.
I need to play my video just so you guys can get a view of my reactions when you guys are deep analyzing the VIX. It's just like, oh Lord.
It's we've talked more about the VIX this week than we have in a year for whatever reason. Back on the S&P for a second, I got to ask Frank a couple of questions.
Well, the final thought on the VIX for option sellers, the VIX being in the 30s is wonderful.
Yeah.
Yeah. No, you'll get premium, and days like this, Mark, they do aid to the way that you personally trade the markets because you like selling out of the money naked puts, higher volatility. You pick up premium on stuff like that. Frank, a technical trader, though, that's just simply watching the market, a Delta trader, you had mentioned some key levels that are developing. Obviously, 3,400 is a battleground on this chart. There's no doubt about it. What other levels are you paying attention to, Frank? Because if this does not hold, where are we looking at? I mean, how are you breaking down the chart?
Well, I'm looking at all of the indexes together. And so, I mean, the S&P is pretty straightforward, right? That approximately 34, that breakout is very important. That breakout point holding support would be a confidence builder for the bulls, right? Enough, I don't know, but they probably would like that. Also lining up nicely with that 20-day moving average. So the S&P as of this moment in time, right? You haven't closed until you've closed. And so if we were to close right now, it'd be sitting on support going into next week. So when you look at the S&P, I think it's fairly straightforward, but you saw the Dow Jones, these other indexes really hold levels that make sense. The Dow Jones holding that old resistance that we broke out of back in July, right? Kissing off of that resistance zone, rallying up off of that. The Russell 2000, bouncing off of not just old resistance, but the 50-day moving average. The NASDAQ a little trickier because of how much it was flying, right? So there might be the oddball here.
Kind of like it though, Frankie.
So yeah, I don't just.
And the only reason I kind of like it, I want to get your take on it because I'm trying to understand it myself, Frankie. The wick relationship on the S&P violated that 3,400 fairly aggressively right on the cash open.
Right, yes.
The NASDAQ did the same thing, but the difference was the NASDAQ came into that historical support, whereas the S&P violated it. Am I overanalyzing it?
Well, I'm a pretty firm believer in it's got to close. It's not enough to stick your nose, if you will. And so do I love it if I'm a bull? No, I'd rather it came right to 34 and the buyer stepped in, and that's where this bounce started, right, from a strength perspective. But I don't read too much into it. I believe that the close is more important information than breaching it. All things being equal. So
good.
So
no, and you saw this on the S&P 500. You saw this on the futures after the shakeout day in June. So you had an old resistance level, and you had the big shakeout day, and then you had a little Friday, and then on Monday it tried to ferociously go down, and it breached intraday that old resistance level, but then you closed above, and then traded sideways for a couple of weeks.
Yeah, I can't count how many times I've told Mark or Mark's told me that a close isn't a close until it's a close. We've said that to one another quite a bit. So I think you have to like when you kind of 1, 2, 3, right? The NASDAQ is, a little trickier, in my opinion, at least, but that's because that's where, so much of the heavy selling has happened, right? It's certainly been market wide, but I mean, it's really been led by tech. I think is pretty much a fair assumption to be made.
And that's a volatile sector. So
yeah. And that's where, like Gino said, that's where so many of our high flyers might not be appropriate, right? They might be super high flyers over in tech. So I think you have to like where you're at from that side of things. I think an interesting thing to be watching, and I think it might be, potentially developing right now, is let's see that failed retracement. So who are we on here, Tim? Are we on the Dow? Yeah, let's just go to a 5. Let's just do a fun little exercise. Let's go to a 5-minute chart really quick, if you don't mind, and zoom in. So if we look at this, and we can apply this to any time frame. That'll be kind of be the signal that I'm going to be looking for, not on a 5-minute chart personally, where we have the bearish retracement, right? We had that bearish retracement where bears clearly came in. And then we ultimately, what do the bears do? They put their stop loss above what they believe to be the pivot, right? So going back a little bit further on that chart in time, when that breaks and we see that 9 get broken and closed above and flipped around, right? So now we've actually got a couple of bullish signals in the short term, right? We've reclaimed the 9 EMA. We've broken the pivot resistance level. Now this is the 5-minute chart, so I'm not going to get, that's not who I am.
No,
right?
no, but you're showing kind of the positive type price action you're looking for to really kind of see this support level start to form, correct?
Exactly. Now, if we go to a 15, we're starting to see that process beginning, right? Where we've ran into some resistance, we're getting a little bit of a pullback. So now we're building off of that 15-minute chart. Is that enough for me on a Friday? Absolutely not. But no one who knows me is going to be surprised to hear me say that, right? But that's positive movement, positive development. Basically, that's my favorite kind of turnaround signal. We've been selling and now we're looking to start buying again, is where we get the bearish retracement that everybody thinks is a bearish retracement on whatever their time frame is, and then it ends up hitting their stop loss, completely turning that frown upside down. So I think if we kind of build on that 15 into that 30 or hourly time frame, at least aggressively speaking, going into early next week, I think that would be the first bullish signal that I would be looking for. I want to see something beyond a 5-minute reversal, right?
Yeah. But again, it just, when you're looking at that, and I know you love your swing trades, you're on your daily setups, Frankie, but when you're looking at the depth of the retracement we've seen in the market, in the S&P and specifically the NASDAQ here in the last couple of days, I think dropping it down into that lower time frames to see the relationships of support and resistance and momentum start to form, you can start to try to understand where these bottoms could form. Now, for me, coming into the weekend, 3-day weekend, even that, I think this is kind of a stay away. Let the market kind of, take the punch and see if it can get back up. But I think if you can close above that 28,000 threshold, which is kind of that old support here from an intraday, you form that double bottom scenario on the 15-minute chart here, you're hit right into that 28,000 when you try to see the price appreciation on the 15-minute chart. It's getting obviously beat back down as that's showing resistance. So if you can see a lower high here, and then start to run into that 28,000 level as well, you can break that. And once that is broken, I think your algorithm shift to the bull side.
They start to. There's still going to be work to do, right? And that's kind of why I always hate deeper type of retracements, even when they're more orderly and less violent than this one was.
Violent retracements are tough
because you've got a lot of overhead. You win one fight, and then you go into, now you got the 30-minute resistance level, the 30-minute 50-period moving average, and there's always something, right? But that's absolutely right. One caveat I would add to everything Matt just said, and to me, this is as important as anything else, is we create a higher low here. Right. So we not only break that resistance level that Maddie was pointing out, obviously that's important, but I think it's most important that we hold support, or even better, build a higher level of support. So we start to shift those day traders, get rid of some of the bears, right? Get some of, hey, now we're seeing some bullish uptrend, and maybe they're more aggressive than me, probably are, right? But kind of want to shift that money around, right? And that creating that higher low would be an important step towards doing that.
Yeah, and I agree with that, Frankie. And to go on your point there, when we're looking at that 15-minute chart and we're talking about, okay, now it's running into that 28,000. You see how I dropped it down into the 5-minute chart to get a little bit more cleaner picture regarding exactly if that higher low is going to be forming, and thus giving those day traders more of a bullish type of sentiment here. I think right now, as we're talking, we're in one of those moments today specifically, not broader picture. I'm just talking today specifically, where if you can hold this support breakout off this W type reversal pattern you saw in the 5-minute chart on the intraday, you're now testing that range right now. If you hold that range, I think the bulls start getting a little bit more confident coming into the close. If that range is not held, I think your best case scenario is stagnation coming into the close.
Yeah, I think so. And that would be perfect. I mean, that'd be my preference. I mean, ideally, we end up somewhere between where we are today and below that resistance level that Matt drew, working into next week and get an actual daily confirmation candle, right? But when you get these deep pullbacks, and I'm kind of thinking about it specifically as, hey, do I want to play this fast retracement, right? Waiting for a traditional, confirmation candle on Tuesday because the market being closed. I mean, that might chomp up a lot of my risk to reward, right? While I'm not advocating I'm going to go ham on Tuesday morning, if there's some upward movement, I probably do want to take a stab into the pullback, a little one. I'm not going to go nuts, but I probably would want to take a little stab. So I want to have a game plan that's going to allow me to do that and know exactly what I want to see. Will it develop? I don't know. Will it work? If it does, I don't know that either, right? But I can really map out how that's going to look going into next week.
And
right, two questions
the reason
for you.
go ahead, Mark.
Okay, two questions. One, on a trading, because like the broad markets are in a mess right now on their chart patterns. What if you find a nice trade setup this afternoon? You're scanning, you're looking.
I'll wait till Tuesday.
You'll wait till Tuesday. What point on Tuesday do you look for confirmation? Because
I think you'll have confirmation going into Tuesday. One way or the other.
Well, this is one of the problems I've seen in trades sometimes is that, Monday, Tuesday's the new Monday next week, right?
Right.
I mean, a gap up that sells off. How long into Tuesday do you wait for the trigger?
Right.
I'm probably waiting for Wednesday in that scenario. And as long as that gap isn't insane, I kind of would like that to happen, to be honest.
I mean, I've seen that a lot in the last 3 or 4 years, where you have a gap up on Monday and then it just sells off, and people that trigger in right at the bell, man, they're left holding the bags.
That's a very good point, because that's the main reason we look at the markets. There's a lot of times where, like on a weekend like this weekend, going to 3-day weekend, you'll have a lot of news. You got some more economic and Fed news next week. It's like, okay, this whole market's moving as a whole. It's, it doesn't matter what sector you're in, it's moving everything. If we get another repeat sell-off, you're like, why am I putting in my bullish triggers, or should I put in my bearish triggers? It's too volatile. Volatile markets really are hard at the open. So what you have to do is you put your triggers in. You got to get up and look at the futures before the market opens and make a decision from there. And you got to be pegged to the market. And if you got a lot of positions, it's too much work. So like Matt said, wait till Tuesday open, then decide where you put your triggers. And
I just think you're going to have a lot of information coming into that cash open on Tuesday regarding exactly how this market is going to behave. I don't think anybody should be surprised coming into Tuesday if this market is up or down, because even though the labor market is closed, the stock market is closed on Monday and the futures market is closed for about 5 hours on Monday. For the most part, it reopens up at 5 p.m. on Monday. It closes down on Monday, I believe at 12, and it reopens up at 5. And so you're going to have a ton of data coming into the market from a price action perspective in this very important cash open coming in on Tuesday. And I would say the cash open on Tuesday is as important of a cash open as we've had in recent history. In these volatile sell-offs, that we've seen in recent history, those cash opens have been very important. So I think we're going to have a lot of information coming into that cash open on Tuesday based on what the futures are doing on Sunday and Monday.
And on a volatile market, you don't want a lot of triggers out there, So when we put out a report,
you don't want open orders.
No. And you're expecting volatility. You get a lot of whipsaw. You get a lot of triggers. If that's how you want to start out your week, great. Now, day trading, if you're focused in on one product, it's great because you can play the pre-market and play the swings. But if you have a lot of triggers from your watch list, you got to be selective and tiptoe through them, and you got to be on it. So I do like to get more what's called certainty in the market. Right now, I think that's why we're seeing so much volatility, is uncertainty going into next week. And the simplest hedge, people are like, hey, what's a good option hedge? When in doubt, get out. That's your best hedge. The best hedge is exit. You know what I mean? Because you're safe. When you're out of the market, you're safe. And that usually is your signal when you hear the word uncertainty. And that's what I'm seeing with a lot of these signals I'm seeing within options market and the way people are talking, the news, the volatility. So there's nothing wrong with sitting and waiting for a good pitch is what I call it, baseball terminology. You wait for a good setup, wait for more certainty, wait till you're comfortable. And that's hard to do sitting on your hands, right? I mean, especially you're brand new and you're at home doing nothing. You're like, God, I really need to be playing this. What am I doing wrong? Sometimes the best move is just to sit and watch and wait for it to settle down.
Hey, and so, the second question on all this, I mean, what are the odds this weekend with a big couple day sell off that somebody bends in Washington and they come together for a stimulus deal?
Why would they? Labor markets are indicating everybody's getting back to work.
Yeah, but we know they care about the stock market a lot more.
Well, that's what I'm saying. It's the Fed that cares more about the stock market performance. It's not the government. And so, I was joking, but I'm kind of being serious. Why would they? Where's the pain in the reports to justify?
As Mitch McConnell looks at his portfolio and it's like, you know, you just can't have this. This is just a travesty in American people.
That's a pretty good Mitch McConnell. I just heard that. That was not too bad. I don't think so, Mark. I don't think it increases the odds over the weekend. I mean, you got a Labor Day weekend. You've got all kinds of stuff going on. And what would the Democrats need to capitulate on their points on this for, just because the market's down 7%? I could see what you're saying about Mitch McConnell specifically.
Are you kidding me?
Yeah.
Democrats they're not going to change their philosophy with the markets down. Are you kidding me?
No.
Like, let's face it, it's a lot of them are probably like, please go down more in the next month and a half.
Yeah. Well, for me today, I'm with you guys. I mean, I don't think you're going to add any new positions. The only kind of traders that would are those that sell options against the volatility and all that kind of stuff. But I think the prudent thing to do on a day like this is prepare. You know, you hedge if you have to, or if you know how to. You prepare your watch list over the weekend. You attend mastermind groups with other coaches.
Yep.
Try to get a good feel. One of my favorite things about this conversation here, guys, is we've got veteran traders here that are helping all of us understand and digest and break down this market sell-off. And, you know, it is 2 days. It's very, very likely. And in my opinion, we will look back at this and say, hey, man, that was a great opportunity. But we don't know that yet. We don't have price confirmation yet. And until you actually get those confirmation points, you can't.
Let me ask the question. Is anybody here expecting some type of deeper, consistent sell-off here?
It's not my expectation.
All right, my bet is, okay, Tim, you go first.
I don't think so. That's not my expectation. I understand the probability of that has increased a little bit here, Matt, but we look at the price action even here this morning. I mean, the selling didn't really happen on the economic data. It happened at the cash open. I think a lot of new traders that aren't used to the volatility are getting shaken out of this market. I think what you guys were talking about, where there's no support in there, that technical sell-off. Now, the close today is important just for next week. But in general, I mean, we had the conversation earlier in the week, guys, and Matt, you were throwing out the questions. At what price levels would you guys not be interested with the Fed put and everything we know about what they're willing? Like you called him daddy today, Matt. I think that's a real nice way to refer to Jerome Powell. I don't, no problem.
I recorded it.
We can call him Daddy Pal, and Mama Government. I got no problem.
If you don't
with
think
that.
he's not daddy to the stock market, you're wrong.
Does anybody here not expect the Fed to come out and try to do something?
All right.
If there was selling?
As of right now, there is no planned Fed speeches or actions next week planned. Do you guys believe we will have some Fed speeches next week?
Statements or speeches, sure. Yeah, I think we'll see something. Yeah.
Guys, that's what I'm saying with daddy versus mommy. All right. Daddy is going to come to save the day next week by lots of speeches about how they're going to be very accommodative, even though they've been saying that over and over and over again the last 3 weeks. It's in these moments where they come to save the day. So no, as of right now, I still think you see this as a buying opportunity. Although if 34 does not hold on the S&P, you got to think more down around that 3,300 with the 50-day moving average at that point.
Mm-hmm.
But regardless of whether it holds or not, we're going to be here to break it down when it does.
Yeah, no doubt about it. And this is one of those scenarios where I don't just need price levels. I don't just need price points. I need price confirmation through the intraday momentum. And I love the way that you and Frank were breaking down all of that intraday action as it was developing.
All right. So my
Let's go ahead,
question,
Marky.
and this is the big one for technically for me. Tuesday at the close has the old resistance level formed new support Tuesday at the close. That doesn't mean Wednesday, Thursday, the following week it holds, but Tuesday, close on Tuesday, first trading day back. I say yes.
So do we think that support will
Price is above the old resistance level at the close on Tuesday.
3,400. So above or below 3,400
Above
on
or below
Tuesday close?
3,400 on Tuesday close.
It's such a crapshoot. You know, I think the most likely action, Mark, is going to probably say below based on the current intraday trends. I still see a pocket down here within that 100-point window. Matt, it could easily just rattle around back and forth. That's a tough one. That's a tough number. We'll have a lot more information by then. But Frank, what do you think?
If I had to, I'd bet on the support zone holding. So I'd bet the over, but I don't have to. So I'll wait for one more day of data.
Yeah.
I'll wait for the futures.
Yeah. Let's flash through the broad markets here, guys, as we're kind of analyzing everything. Matt, if you can, crude oil selling off pretty sharply as well. Let's take a peek at that chart. And obviously, I mean, this is now a new kind of pattern, in my opinion. You're down 4.5%, breaking below some support zones. Matt, what's your read there technically?
Read there technically is I think you got to call this a breakdown as of right now. I was neutral in between 40 and 44. As I said yesterday, I think the best way to go about that is be negative 40, expecting a breakdown when you're setting at support, and be positive 40 when you're setting it, right underneath that potential breakout zone of 44. And so I don't think we should be surprised that we're seeing a breakdown because of what we talked about yesterday and the increase in volatility that we've seen over the last 3 trading days that have really gotten crude back to, you're starting to see crude starting to act like crude. That's a great way to put it, Frank. This maybe we're just so numb to crude's price action in the last 3 months that we don't realize this is normal for crude now.
Right.
I mean, this now feels like crude is back to being crude with some movement here. And I'm actually excited for it. I don't invest in crude and I don't do cash flow strategies on crude, but I do think it's a wonderful directional tradable instrument, either on the bull or the bear side. And it can be very volatile, but very consistent in its volatility when crude wants to spike or crude wants to sell. So I'm still maintaining the same philosophy that I'm not going to trade any of these breakouts. I certainly would understand somebody looking at crude with a price target of 38 saying I'm going to be aggressive here on the downside. I'm still waiting for that for a trend to develop. And for a trend to develop, you not only have to have the breakdown or breakout, and right now we are seeing the breakdown, you got to see that form that lower low followed by a lower high. And so I think for me, and maybe this is just because of the how boring it has been for so long, that I just need to see a trend develop here. Right. And once I see a trend develop, I think you can start mapping out probability. Until then, I'm still a stay away. But it is starting to wake up to the point where I'm getting a little bit more anxious on active trading.
Frankie, do you agree with Matt on the volatility?
Yeah,
and
I mean,
interest?
I'm still not interested at all. If I'm looking at anything, and I'm probably not, I'm going to use this information if we get that break to hop over to the energy sector. If you look at XLE, that's also knocking on the door of a breakdown, right? And so that would probably be more interesting to me. I'm with Matt. If we drift and retrace back into those falling moving averages, and next week that's where we find ourselves, I think we could talk. But I'm still, part of it is just crude's been off my mind for months now. And now I actually have to put it back on my mind. So I want to, think it through. I want to kind of see how that price action goes. I don't think you can read today's price action and this week's price action as anything but bearish to some level. But beyond that, I'm not really interested.
You know, as I'm looking across the other commodities here, I do really like what gold is doing here today, Matt. Pretty impressive with the market selling quite ferociously over the last 2 days. Gold is still holding on to support, even with the dollar rallying, gold holding support. I mean, I think it's setting itself up, and I love the price action here.
Okay. Which one do you really want to have as a storage of value? And just if the last 2 days are an indication, stocks, bonds, Bitcoin, gold.
Well, since Bitcoin's down about 20%, stocks are down 8% off the highs in tech, and gold is holding support. I think gold is probably the obvious answer there. Yeah.
Yeah, I think so.
You got to be excited about this if you're a long-term gold position trader, right? And or investor or whatever it might be. Support, consolidation, price actions kind of chewing it up. Even that little triangle pattern that was developing, now we're starting to move more sideways, holding that rising moving average. Frank, how do you unpack this chart here, and what do you like about it?
I really like that we're holding support. I really like that gold is behaving pretty much like I thought it was going to after that. And that's kind of what I think about the market too. You know, when you asked me in the pre-production meeting, when you get that fast, steep pullback that's a little, I don't expect it to rally right back up to the tops off the bounce. I expect it to bounce and then create a lower high and then chop and see, let something develop. And that's exactly what we're seeing over here in gold. I love that we're holding that support level. I think you could at least, today's candle, I don't know that I would call it confirmation, but I think you could at least talk about betting on the support from an entry point of view, still above that rising 50. Maybe would like to see it break some resistance, and for a pure technical signal, I think taking out that high from earlier in the week would be, holding support, taking out that high would be confirmation. But I do think you could make an argument, I believe, to bet on the support holding here.
Matt, where would you find a new entry? I mean, blindly playing on the support holding. Do you want intraday confirmation? Let's say that you were looking to add to some.
Has my analysis changed at all in 3 weeks?
No.
No,
it hasn't really changed in 6 months on gold.
No, it hasn't changed since October of
2018. Yeah.
But no, in terms of the weekly breakdown on that weekly chart looking sexy versus if you want to pinpoint your accuracy, you wait for that close above 2000 and you rock and roll from there. It's the same analysis. As long as support holds, there's no update to that analysis. If support breaks, and there's scenarios where support breaks here, guys, no doubt about that. And the number one scenario is if the market doesn't recover, guys. I actually believe that if the market sells off more aggressively, gold will sell off initially. I believe that. And I believe that based on the philosophy that you'll see margin calls and you'll see hedge funds liquidate more gold positions to offset some of the margin calls. And so initially you might see some sell off there, but and again, I'll have to look at the data at the time, but I'll as long as it holds 18, I'll see that as a buying opportunity.
I agree. And I think
that's really one of the only things you're really scared about in this market right now, at least not for me personally, is that for whatever reason, support doesn't hold on the broad market, margin calls, and you get this gigantic sell-off because everyone rushes for the exits for 2 days, right? I mean, that would take gold and Bitcoin and silver and copper and everything down with it for that couple-day period.
There are really only 2 scenarios where I would update my fundamental conviction on gold. Okay. Scenario number 1 is if we see a modification or a change in monetary policy. If you see a more aggressive monetary policy at some point in the future, I think you have to update your philosophy on gold. Okay. That's that first one. And then the second one would be if volatility gets to such a level in the commodity market, specifically regarding gold and silver, that the CME group starts the conversation of increasing margin requirements to hold futures contracts in the precious metals environment. In that capacity, I think I would update my fundamental conviction on gold as well. And let me rephrase. I would believe even more so in it, but it would have to be a stay away in the short term because of what that historically has proven to have price depreciation on gold circa 2011 and 1981. So in terms of that, unless I see those 2 things, or either one of those two things, the argument for gold ownership is extremely, extremely high. And I don't believe at any point in our lifetime, the argument has been more bullish for gold ownership than it is in this environment.
Mm-hmm. Yeah, no, I agree with all of those things. And that's why, I mean, to me, I mean, if you're already fully invested in gold, that's one thing. You got your portfolio position sizing the way it is. Outside of that, if you're looking to add though, Matt, I mean, you got to kind of map some of that out, right? I mean, I do like an idea of maybe gold above that pivot point that was developing there around that 2000 mark. A bet on support holding down here, Frank. I mean, that would be, kind of a probability type trade. Is that the way that you would approach it, Frank?
Yeah, exactly. What I'd really like to see, if I'm thinking new entries, I'd like to see that support hold, run us up, put in a lower high than that 2000 from earlier in the week, and then break that for the signal. But that that would catch our moving averages. I'd love to see those, that 9 get back above that 20 to give me a confirmation signal. So, I'm not a blind bet at support type of a guy. I'm more of a, buy into, at least what I think is momentum. And so that's kind of how I would want to be thinking about a bet on support here. It might, the downside of that, if that support holds, well, good for everybody but me, right? So, but I'm okay with that.
Across the other metals here, silver on a doji, platinum, palladium, not even grabbing my attention here today. But I will say this, the silver chart's got a little different analysis here, Matt. And obviously we're not talking about the same kind of fundamental thesis around silver. That feels like it's moving more neutral in the short term to me. Matt, how do you read in that one right there?
Called it 2 days ago, Tim. I said on the failed breakout of 28 when it came right back down, faked it out. Break out the fake out. Is that a play on words? Can I do that one?
Yeah.
Break out the fake out.
I thought it was break out the shakeout.
Well, I know, but now
you're changing it.
I'm modifying.
Oh, I see what you did.
Yeah. See, Gino got there. Gino got there. I like it. No, I think with the fake out, it does update those triggering systems you have on silver, which, unlike gold, silver should be treated as an aggressive swing trading type thing. Even if you position trade it, I still think you need to treat it technically like a swing trade. And so with the failed breakout we had on, what was that, Wednesday? No, it was Tuesday of this week.
Tuesday.
And then it obviously came right back down Wednesday. I just didn't feel at any point you have a positive reward to risk with with an edge, a probability factor. So to me, it can stay neutral between 26 and 30, 26 and 28. I don't think there's anything to see here on the bull side, outside of longer term investments, outside of position trading. Obviously, I'm talking swing trading here, until we see some type of breakout at 30.
I would agree with that. Mark, in terms of the other metals, copper, it does have notable strength here today. What can we attribute that to? I mean, I would expect, copper to be kind of moving with some of the other industrial metals. It is up very healthy. I know that you've got like a 330 target on copper. Are you seeing anything in that chart grabbing your attention?
Listen, when you get these like shakeout days in a major market, man, I mean, oil down, not surprising given all the volatility in the equities, and it's just these things happen. And copper has a really, really strong pattern, has strong momentum. But like, it's going to get hit in the short term sometimes. The fact that it's not, and could you pull up the copper chart real quick?
I'll get there.
Yeah. So like yesterday, it got hit with the move down, like a lot of things did, right? Like market sell off. There's just been a lot of strength in copper for a long time ago. I would be really, really surprised if we don't see 3-3 hit sometime in the next couple of months. Which is a major historic resistance level. And if it broke out of there, more room. There's just too much liquidity and money in the economy. Dr. Copper has been trending nicely for a long time. It's just a really good environment for copper, technical, fundamental. And I'd be really, really surprised if it doesn't hit 3-3.
Two quick ones on broad analysis, then we'll get into individual companies. And Frank, I'm guessing you brought some charts to
I got a few.
Peek at.
Yeah, I got a few.
Yep. Let's just look at the dollar and then Bitcoin for me if you can here, Matt. Quick analysis on those two products. Copper looking great on those long-term charts. Bitcoin coming down. We're going to be testing these zones down here, Matt. Obviously, that daily chart breakdown significant for short-term traders of this product. It did break below 11,000. We're now down here. It tested that 10K mark, didn't it? Even touch below it.
trying to remember who told me in the halftime report a few days ago that I was wrong on Bitcoin at 10,000.
I think
forget.
I don't remember that. I don't know if I remember that at all.
That sounds like it was probably Tim.
Yeah.
I don't remember that one at all.
I forget I said that.
10K.
It'll come to me. It'll come to me.
Who's that guy that was like, this looks like a Head and Shoulders with a possible
Yeah,
breakdown?
I can't remember who said that either.
Who's that guy too?
I can't remember who said that either.
Interesting.
Oh, Bitcoin's gold
Bitcoin
anyway,
80,000.
guys, so,
Screw y'all. So.
Again, I'm a longer term player with Bitcoin. The short term stuff doesn't really work with me too much. In fact, I don't even think daily charts are that great for me to look at because of the way I approach Bitcoin. But this 10,000 level for any Bitcoin trader is significant. I don't care who you are. Watching how this test down here, that's old resistance. It was a 3-month range that we broke out of violently about a month and a half ago there, Frank. Now we're coming down pretty sharply, down 15, 20% just 3 days. And that's how this product can work. It's very much a high flyer, Frankie.
Yeah, it can definitely move, but I'm with you. This is an important, I don't know who wins, but this, that 10K is an important, hey, it's a big number, but more importantly, we've got a lot of history there, right? So I'm interested in seeing that battle. That's all. I'm not interested in playing it, but I am interested in seeing how that battle shakes out.
Man, I would love to find one person in the entire world, and I have looked for it, who could explain day-to-day price action on the catalyst for Bitcoin outside of technicals. Like, what is the driver on a given day or this? I mean, it's just.
I think it's algos and traders, Mark. I don't think there are fundamental catalysts too often. I mean, you get them.
It truly feels like a video game. Like, it truly feels like you're playing a video game with the Bitcoin always.
Hyper-focused short-term traders definitely approach it just from a pure technician standpoint. That's how a lot of them do it. Longer-term investors, it's the split between technicals and fundamentals. Day traders on Bitcoin and those algos definitely can shake that out. The dollar here last month, then individual companies, if we can. Dollar's got a little retracement into a neutral range here developing. And, I'm seeing this slightly bearish, but that's just because of that one tiny lower pivot low and lower pivot high there. But it is starting to roll over, Matt. There's no question about that. It's rolling in from a momentum perspective. Tell me neutral. Tell me a very slight bearish. I think that's kind of splitting hairs a little bit.
I was really bored the moment you started talking about the dollar. So I'm going to throw the analysis to Cody.
Cody,
oh,
dude,
God.
Is this my cue? Can I go have a? Can I go do my stuff?
Mark was like,
how long are you going to talk, Cody? Because can I warm up some food? Is basically what I'm curious about.
Mark's got some Campbell's chicken noodle soup.
No,
here, Cody.
I agree with you. The dollar's boring right now, and I mean it does have a slight fade down. I would still put this as neutral, slightly leaning bearish, and that's all I have to say about that.
Yeah.
I can't warm up some mac and cheese in that amount of statement.
What else is there to say?
It's hard when I started by saying this is the most boring conversation.
I know, right? We can't lead it. You guys don't do that to Cody again, because he loves this stuff. You
had time to pop open a
Cody, can you geek out for like the next 10 minutes on currency trading?
I mean, I could, but I'm not going to. I need to get out of here.
Things to do.
He's like, I'm not doing this right now.
Yeah.
Cody, a veteran would have taken that and flew with it. Let me break down how the central bank is going to impact.
All right. Okay. Let me do this.
I was kidding. Don't take
we're not doing that.
We're not doing that.
We're not doing that.
I'll just say there are a few setups that are starting to work their way in there. The Aussie dollar is one of them. The Aussie versus the Japanese yen is another. I'm really liking these setups right now. So that's a breakout pullback. So there are some really nice setups out there right now, and I plan on talking about all of them tomorrow on the Forex report.
Mm-hmm.
Yeah,
Cody,
nice.
can I get a correlation conversation with how gold also impacts Aussie, New Zealand, and oil with the Canadian dollar?
What do you got to do, Matt? You got I am now I'm curious. What does Matt got going on that he needs to stall for 5 minutes? Is it like somebody at the door? I mean,
water's lawn.
Oh, no. I was talking about in the write-up during the report. I actually would like to, see some correlation
right up on that. That's a good a good topic.
Yeah.
All right, companies, guys. Let's break down individual ones. There were a couple of companies that had earnings, that did, at least from a headline standpoint, grab my attention. DocuSign, Broadcom, and so on and so forth. Matt, did you get a chance to look at numbers? Day like today, when the markets are going off crazy like that, sometimes I don't necessarily get to those individual company analysis. Did you get a chance to speak at the earnings numbers on DocuSign?
I love it so much when you ask me questions that you don't know if I know the answer to it.
I don't know if you
love
did or
it so
didn't.
much. It makes me so happy and warm inside. No, I did not get into earnings numbers. None of them really interested me today.
Mm-hmm. Marky, did you take a peek at DocuSign or Broadcom? Day like today, it doesn't seem like that's something people are going to do individually.
I mean, I saw that they beat, right, but like it's like, like when the markets, like, I mean, everything that are trading in baskets today, right? Like Zoom's down, Peloton's down, Chewy's down, DocuSign is in that group of stocks, so is going to trade with that. Here, let me give you the broad analysis. Decent company, good growing, still ridiculously overvalued, but it's like one of those things where I mean, go ahead.
Yeah, no, I was just gonna say, Mark, give me the over under on fairly similar CrowdStrike numbers.
I bet an even line on that.
Yeah. Should
No,
we look them up?
Because I mean, DocuSign has a business model that is going to. I mean, one of the reasons. I mean, it didn't completely unjustifiably have the ridiculously nice trend in price appreciation over the last few months. It has a growing business model. There's something there, right? It's a company that you can see, like being around 5, 10, 15, 20 years. I don't know if it has a moat. That concerns me from an investment standpoint. I don't know if another business can't, duplicate what they're doing. But it's an interesting little company with some growing numbers. It's just, I mean, what are you going to pay for that when they don't have a moat? That's what, for me, on a company like this, seems silly, right? I mean, what does DocuSign do that Google or Facebook or another tech company say, hey, I want to duplicate? That's a good thing. I'm going to do that. I mean, it just doesn't have any moat to me.
For weeks, though, guys, I mean, we were getting blowout tops on companies coming out and reporting just slightly better numbers. Some of them great, some of them not. DocuSign beat the EPS number, and
wrong day to report earnings, bro. Right? Wrong day to report earnings.
That's the thing, I'm watching this momentum here. That broke out, ran up. It looked like we were going to have one of those momentum runs. Market conditions change. Your price reactions can change as well. I saw the same thing.
I did look up the numbers very quickly on DocuSign, guys. It came in at 17 cents a share versus the expectation of 8 cents, so a slight beat on EPS numbers. Revenue came in slightly above at 342 versus 318. Revenue grew 45.2% year over year, and the company expects its guidance to slightly, increase. So slightly increase. It literally, Mark, is copy paste CrowdStrike, copy paste performance, copy paste guidance, and the only difference is one was up 85% on revenue year over year, quarter to quarter. The other one was up 45. It's a very similar report. And that one wasn't hard because these are the reports we've been seeing in every single one of these companies. Slight beat on EPS revenue numbers and really big beats on quarter to quarter revenue.
I mean, I hate to say this, but DocuSign is symbolic, like a few other companies, of the tech bubble of 2000. I mean, it's not that the companies of 2000 didn't have, like, some of them good concepts and concepts that would eventually play out. It's just the prices you had to pay in 2000 were so nosebleed price for perfection for the next 20 years that is an almost impossible standard to live up to. And it also is a standard that people are just not going to consistently pay that valuation. They're going to pay it for a month. They're going to pay it for a year. Eventually that breaks where they're like, no, I'm not going to pay for 20 years worth of perfect growth for this company. And that's what causes the tech bubble to burst.
Oh man, Mark, if you could sign me up at this point, if I could get perfect growth over 20 years, yeah, I'm good with that. At this point, it's like perfect growth for the next 200 years.
Yeah, I mean, so it's just DocuSign is symbolic of why myself, why other individuals refer to the market that we're in as a bubble. You have stellar companies like Apple with ridiculous valuations. You have your DocuSigns of the world that are just bubble. They're just a bubble.
Hold on. Is there anybody that doesn't think we're in a bubble outside of Fed apologists?
No, it's a bubble. I mean, if the
Outside
conversation,
of Fed apologists, does anybody really believe we're not in a bubble right now?
I would hope not any rational person.
I haven't heard arguments.
What about my Peloton stock? Do you think that's a bubble?
Yeah, your Peloton stock is in a
Yes, your
gigantic
Peloton
bubble.
stock is a
No,
gigantic.
but I mean, come on. At least I'll have an expensive clothes hanger to hang my stuff up, right?
There you go.
Gino loves his Peloton stock.
Yeah.
And once again,
Is that
he's
your
not the-
most hated stock? Hold on.
Hey.
Is that your most hated stock, Gino?
Well, here's the
Peloton?
thing: is all these exercise equipment, the Bowflex and stuff. You know why they make it convenient to fold under your bed? Because that's where they end up when you stop using them, right? Is they end up being in the workout industry. Is hey, you're not going to use, you're going to hang your clothes on it. It's going to be a hanger in your garage. Do you know how many of those you're going to see in garage sales after everybody starts going back to work? You know, so that's going to be a good example of a bubble. So I've got it on my short list going forward in the future. But look at the chart and look at that valuation of it. It makes you excited. It kind of says, wow, this thing's on fire.
It does. I'm with Gino.
Today even, right? I mean, look at the setup today on the 20. But honestly, this is one, if you're not a trader and you're not ready to get out of this when this bubble pops, in fact, earnings.
There's going to be some really good shorting opportunities at some point.
Well,
some
across the whole
really,
market.
really.
Yeah.
But
Look at
even though we're in a bubble, guys, I don't think we're at the top of the bubble. I personally.
Oh
don't.
yeah, I don't think things go straight down from here, right?
No,
like,
no, I don't
listen,
think
the
top of
Dave
the bubble.
Portnoys of the world, you think that they aren't going to make one last stand, buying 100 million out of the money options and doing everything they can and just treat this as a normal dip? Oh no, they are.
No, this is
listen,
by the dip.
I think DocuSign and Peloton are at much, much lower levels a year or two from now. This is not the end of it for today, though. Like,
No,
right?
I don't
It's not
think-
going to go straight down from here.
Mhm.
I am certainly not ready to call the top. I can tell you that.
No. They got another stand. Are you kidding? These people are crazy. The Dave Portnoys of the world, they are lunatics. Crazy
I also
people
think
don't
the Dave
give up
Portnoys
like
of
that.
the world get a lot more credit for moving price than they actually deserve. They can take their 5 shares and 10 shares and 100 shares and 150 shares. They don't move the volume like institutions and hedge funds.
There's a lot of them these days, though.
There's more,
There are
but there's
lots.
more money at Citadel.
Again, I want to be very clear. It feels more because that's what people talk about.
Mm-hmm.
Social media isn't real life, guys. It's not.
Pull that audio clip.
Yeah, but we have seen
gonna have
evidence
to-
No. It is not real life.
I agree
I have
with
seen
that.
this in
The
every
next time,
capacity.
the next time Twitter finance gets you up in a rage, I'm going to remind you of that.
Are you kidding me? I say that to myself 10 times a night, like I'm
Put
whispering
that on
into
your
the
wall.
mirror. Twitter's not real life. Twitter's not real life. I got to say that to myself every day.
Real quickly, are we looking at stock before I forget? Have you seen the Zoom chart? Where do you see the support on that one? Because we're using Zoom quite a bit, and I'm hearing that word almost
300.
Yeah, it's got to backfill probably the entire
I
gap
mean, look
there.
at that.
There's no,
gap fill.
it's
That is
easy.
a
It's
huge-
300. That's the support level.
Mhm.
Yeah,
Mhm.
huge gap fill.
When I was doing my scanning here today, there was a lot of stocks just like this. Obviously these big momentums, the earnings gaps, we've been talking about on the halftime show for weeks, and you are seeing them aggressively backfill. Most of these scenarios, though, on a Friday here, guys, I mean, this is going to be a needs doji, needs intraday confirmation. We need to see more next week. And even Zoom, I mean, that needs a lot more development in it. When you're in these violent pullbacks, Frank, it can make scanning a little bit more difficult, but that's why we also do our bird dogging and
All
whatnot.
right. Admit it. Who bought the ticket for 478?
Not I. I would
Somebody
like to,
did. I doubt anybody
Hey,
here.
at least you have something to
did.
brag about, right?
Who bought the tick?
Somebody did.
yeah. Frankie,
Who was the greatest full? Not the greater full. Who was the greatest full?
Who bought the
there's a lot of
absolute high?
shares right there that did get filled. So somebody's looking at that going, how did that happen to me? Right.
Now, and think about it. One of the students yesterday brought up an example of like his friends were buying out of the money calls to try to make up for the loss in Tesla. Imagine if you bought calls at 478 and then every down day you kept buying more to try to cost average down to make it back. I mean, where would you be today, right? That's why
Well,
it's a
first of
terrible
all,
strategy.
hold on. Dollar costing zero isn't an effective strategy since 2 days later your call option was worthless.
Which stock did you say? Tesla?
Well, that's what, yeah, the example was, you know, from.
Yeah,
from
look at the
report.
chart. Look at the chart. The major doji candle here today. You know, it's a nice example of bull area doji. God, you couldn't draw better than that. That's interesting. That's when you got to wait for a signal for next week above today's high, because that's textbook bull area between the moving averages above the 20. Will it finish here? I don't know. I don't know, but God, that's a.
You guys have any interest in Tesla here?
I like the pullback.
20% drop in 4 days.
I mean, here's the thing. You got that green doji type candlestick. I know it's not a doji when we're talking about a range that it's been
It's a
in.
morning star.
I have
Morning
interest.
Star. Yeah,
I
there you
have
go, Morning
interest
Star.
here.
It's a morning star.
Yeah.
Yeah. If it stays there, but look
I
at
called for a 40% drop last week. So
Listen, you
I'm not
shouldn't
So
say
that's a
that.
no
I was
for
going to
Mark.
give you credit. So I was going to be like, Mark, you called the massive sell-off on Tesla. What do you have to say now? But that just ruined that. But I mean, yeah, I know the headlines are Tesla's down in bear market territory. Guys, this is after Tesla went up like 8,500%. So
look at that.
let's put it into perspective. This is a bullish retracement. If you look at this from a technical perspective,
Still
not
is.
only do you have your 3 to 5 day pullback, you're coming into a known area of support right there at the significant hold number of $400. You're right there in that crunch of the 9 EMA and the rising 20-day moving average, where it's trying to find support on the 20-day moving average. And Tim, I know you love it when I do this, but I need to give you a nice little Fibonacci retracement of 50% there. You're right in that 38 to 50% retracement, which for Team Tackle, it wasn't me who called that the Goldilocks retracement. It was the person who hates Fibonacci's, Tim Justice, who called that the Goldilocks retracement. You're seeing slowing momentum in the daily candle. You got a morning star candle. I know it's volatile today, but everything is volatile. Can I sign you up for an upward movement in price, reclaiming that 9 EMA, which the last 2 days, guys, the last 2 days, the high of yesterday, where did it coincide with? Right there at that 9 EMA. Where did it coincide today? Right there at that 9 EMA. So if we do, seeing the slowing momentum on Tesla here, and I break this down a little bit from an intraday perspective, if you can say break out of that 420 area, which just coincides with Elon Musk's favorite number in the world, isn't that like signing up the heavens and the earths and the stars aligning? Elon above 420. How are we not doing this?
Elon above 420.
I'm with you. I'm with you 100%. It was on.
I'm warming up to the idea. Yeah.
Doesn't it get higher above 420?
I see what you did there.
Nice play on words. So higher 420.
Gino's got me playing on words today.
There you go.
You and Gino
by the way, Frank, we got our lower high in the S&P.
I gotta see the option order flow at 420 on the front month option contract.
Tim, real quickly, can you show an example of the ES? We did put in our lower high.
Well, let's stay on this for a second, Matt, because actually while you were talking there for a second.
Look at the order flow on the 420. Yeah. Look at the order flow. Oh my God, 2,700 contracts on open interest. Dwarfs everything else. 1,000 on volume. This is something, guys. I'm on.
You're onto something, man. First we went to Fibonacci, and then now we're
listen. I worked in a Fibonacci getting high above 420 analysis. Come on.
Next is Elliott Wave, right?
Well, that's if I actually got high, Gino. That's in those.
Let me go get my astrology map. Hang on a sec, because the planets are closer to the moon this month. So anyway,
yeah.
Real quickly, another one. I got a question for you guys. This is on the major watch list. AMD, is it going to hold? Double bottom. AMD has had a killer run.
I can
tell. If you guys haven't realized, Team Tackle, it is Friday Fun Day today.
It sure
That's
is.
Right.
I can tell you, Gino. I got out of my AMD trade yesterday.
Oh, nice.
Yep.
Yeah.
Was that okay? Now, Mark, was that
because I was approaching it as a swing trade. I was playing the breakout. You got to play your rules. So I know that it's got some support down here, but to me, that pattern kind of got blown up. I know we love AMD, but you got a failed breakout now, and now you're coming down to support. You're below those two moving averages. Maybe I'm overthinking it, but I got stopped out.
You're not overthinking it. This breakout, you don't miss breakouts on AMD until they volatilely shake you out, and then you miss it.
Yeah.
No, listen, there's nothing that happened this week on AMD that will trigger me to not trade the next breakout on AMD, but this one is obviously felt.
Yeah. So if it
Yeah.
does break down, that would be a good example. Mark was talking about the shakeout at 94 there. That little pop up to the high, I thought it was going to go to 100. You know, did we have this little theory? Hits 90, goes to 100.
You know, there's a report out in the last 24 hours that China is planning to develop a new set of government policies to develop its domestic semiconductor industry, part of a long-term plan. I mean, listen, you can't target a country and say, you're bad, we're not going to do business, we're bring our business home, and then have them not say, well, you know, I guess we're just screwed, you know. No, so like, you know, with a Chinese emphasis on semiconductors, building their own domestic industry, this, if that gets some legs, that's one of those things that can shift sentiment. AMD, large exposure to China, has me a little concerned.
Yes, all of those things I can agree with. But if it does consolidate and gives me another signal, I'll still trade it because this one has been a hot stock from a trading perspective. The pullback shook me out. I know
What
that.
would the signal be?
Oh yeah.
It's a messy chart.
That's a good question. From here, it's going to take some time.
It was a bad breakout above. What was the breakout point where the double top at?
It's about 87, 88 right in there.
Yeah, that was a bad. Well, you know what though, Tim, it went to 94. So there was a lot of room to take profit in there.
Yeah.
But that big red candle from 94 all the way down to the breakout point, it depends on where you had your stop. So you got shook out yesterday. You got shook out below the breakout point, which is on our step system, the rules of the step system where you put your stop.
Yep.
Not a bad breakout if you're quick to draw on like Matt does the 15-minute candle, probably nailed it. But that kind of tells you got to be quick in this market, man, because this can happen, you know. This double bottom here, I don't like. That goes back to that red candle on August 11th, because I think if it breaks that to the downside, it held it very good today. It held it. So again, will the market let it break that below that, because we're going to have another gap fill? But very interesting chart. So something like this, guys, what I hate to see, I've seen this in my portfolio. I've got AMD from $12 a share. Okay. I've already taken profit many times before it even got to 50. But if you're still holding AMD from when it was 50 and it almost hit 100, don't watch it go back down to 50. Okay. Don't watch it go back down to 50 and sit there and beat yourself up, because there will people that do stuff on bubbles and stocks like this. And I'd hate to see this thing do it, but it can do it. It can do it.
I think it's really early to start calling AMD at 50. Of course it can do it if you know the personality of that kind of company. It just broke out of 50 like, 4, 5, 6 weeks ago. So I'm with you. Understand your risk, understand your volatility, but it's still a beautiful long-term chart.
AMD can absolutely fly one way or the other. Yep. Nobody would be shocked if AMD went back down to the breakout channel at 60. Nobody would be shocked here. Yep. The breakout, yeah, looking back 3 days ago, it's like, oh yeah, you got shaken out. It was a failed breakout. There is not one thing I am learning from that experience. One. There is not one time in the future that I see a potential breakout on a stock that personally I like, on a stock that has consistency on breakout, on a stock that had 4 weeks of consolidation, post a very positive earnings report where I say don't take a breakout of 88 with the target of 100. There's not one thing that people should learn from this failed AMD breakout other than this was bad timing with the market performance the last 3 days.
Very bad.
No, I mean, you are not. Breakouts are one of these, like, you're going to have a lot of failed breakouts.
Yeah, you will.
That's the cost of doing business.
Yep.
Yeah.
If you can't like take the punch and trade the next beautiful breakout, you just gotta learn to take that punch and be like, right, next time a great setup, I'm still going to trade it. And that's what pro traders do. That's what people with experience do.
While we're already on charts, kind of looking at charts, having some fun on a Friday here, Frank, the one thing that I think everybody looks forward to is when you start going through some of the charts that you've curated and brought to the show here today. Why don't we transition into that right now? And Frankie, what do you got there, my friend?
Awesome. Well, a little tougher, like you said earlier, it's a little tougher on a day like today, but that doesn't mean there's not stuff out there, and maybe you have to be a little more patient. Maybe you don't have a lot of first of the week entries, but I always have a few things. First up, I got to look at CADE, CADE. That's Cadence Bancorp. I actually really like what I'm seeing on Cadence Baycore.
Well, breakout of 10, target 11 here, Frankie.
Yeah, exactly. A very clear, not a lot, but I mean, 10 to 11, that's where we have the 200-day moving average. Obviously a legitimate challenge. There was some resistance back there. We get above that, it would probably coincide too with the, sector as a whole, which is kind of the, XLF is kind of stuck, right below its 200-day moving average. So probably need the sector to get running to take that out. But I really like this as a nice, low dollar little stock play on the breakout side of things.
All right, let's play the veto game, guys. As Frank's doing this, let's play the veto game.
I like it.
I wouldn't veto this one.
Nope.
No. I like the clean reward to risk is what I like on this one.
Very nice bullish triangle.
Yeah, a little triangle to boot. Yeah, really.
Yeah, and it's kind of a cup and handle too. If you look at that, I like
I agreed. It's not the prettiest little cup and handle, but I would agree.
And for me, it'd be a stock trade.
Me too. I would agree.
The financials have held up well the last couple of days. Now, the only concern I have is this just a rotation? Is the last couple of days this really weird rotation, a swing rotation day? But financials have been holding up for a while now. So,
well, we're not market ordering here. It would be a breakout of $10, which means you would have momentum going into it.
I mean, here's the problem I have is that I have to target personally the falling 200-day moving average.
11,
yeah.
though. That's okay. That's still a 10% price appreciation.
Yeah, that's a lot of room.
It's a good return.
So, I mean, that's what my target would be. So if you can make the risk reward,
I'll make it work for you real quick. Give me.
That means you could be down to 950. Which is basically...
Stop loss right underneath 950 is strong intraday support level. You trigger right above 1005. You take about 60 cents risk too. You got about a what would that be? About 1.6, 1.7 to 1 reward to risk ratio at T1.
Just under 2. Yeah, just under 2.
Well, no, and it doesn't need to be 2 on T1. It needs to be 2 on T2.
Yep.
So yeah, I mean, cheap risk for a potential trade there. I like it, Frank.
So,
I agree.
Yeah, and even maybe prettier would be if we could get an inside green candle on Tuesday, because then we could get our stop loss up a little bit higher, right, and have the same target, same entry. So we'll be greedy. Why not? It's Friday, so we can still be greedy. I still have a Mosaic on my breakout list as well. Still looking for that break of 19. We stuck our nose right into that resistance. We talked about these guys last week. Consolidated. I actually, when I'm looking at the sectors as a whole, the material sector ETF's chart is probably my favorite. It's testing the old resistance as new support. If I see some movement, and many of these chemical companies have held up okay, in my opinion at least, a breakthrough is still on my watch list.
Hey, Frankie, I got a question for you on Mosaic specifically. $20 is one of those significant whole numbers that we just kind of gravitate to psychologically. But there isn't a lot of historical evidence on Mosaic specifically to say $20 is going to play an important role here, whereas the majority of the price appreciation historically you're looking at between 21.5 and 22. Would $20 still play a role in your targeting methodology, even though there isn't a lot of historical evidence of that playing that psychological role?
That's an interesting question. In a bubble, no. But what I will try to do, what I'd probably like to do, is set 20 as my first target and liquidate part of the position, in my case, half. That's my personal style, is close half at target one like a giant wimp. And so I think we can probably make that work to target one. I'm not overly concerned because it hasn't been. We haven't seen a ton of reaction at $20 historically, as you pointed out. So I think it'd make a very sensible target one. It wouldn't keep me if I couldn't make it work. If risk to reward put me target one,
I think you can make it work.
I'm almost certain I'm almost certain that I could as well.
So unless though, and I like that hashtag wimp trader or trading wimp. I like that. Be conservative, right? But even though, because it plays a role for me too, Frank. And that's why I wanted just to get kind of that secondary confirmation, because even though historically it does not play a role, there's not a lot of evidence in this neutrality here of that $20 playing any significant role. I still think it psychologically has to you have to use that in targeting. I still think psychologically you do.
Yeah, I mean, I don't think you have to, but I would. I certainly would like
See,
to.
that's my I have to, like you have
Yeah,
to.
I see.
Okay,
Yeah. When I look at this chart though, I see that break, and if we get that break, I don't really see any technical reason why we're not into the 2150, 2170 range. There's a ton of challenges there, right? And so does it have to be 20? No, I don't think so. I'm with you though. It kind of would for me.
I think you're making. I think you're making a management decision whether it's just to adjust stop loss or scale out a portion of the trade while you let the rest run into that 21.5 target.
Yeah, I think that's how I would be approaching that as well.
Yeah, I like it. All right, next one.
While we're on the subject of chemical companies, something going to look a little bit different is ALB. These guys I watched forever. I think they got vetoed a time or two. It took for a long time for them to break. They broke, ran, and are now in that ballpark of testing that old resistance as new support. This is going to be a little tougher to get through because it happens so quickly, right? So this is one of those, the price is right on ALB, but we might need something to develop. Sure.
Okay, here's my prediction. It will initially get vetoed, and then I will know exactly who is not watching the halftime report because of this analysis, because they will approve it. That 1 day drop, the size of that red candle is going to spook some people.
I would agree. Right? I think that's fair.
And so like there might be a little bit of a quick veto just based on the size of that red candle. And then I'm going to say, yeah, but guys, just focus here for just 1 second, because I want you to look at the strength of this intraday support between 90 and 92. So the breakout was clean. It was breaking out of a wonderful, wonderful technical criteria right there about that 93 at 30 by 93.5 level. Everything was looking great. Where did it go into? It went into your primary target at $100.
Yep.
And if you would have saw that pullback that happened in 1 day into that support level, if that pullback would have been 3 days instead of 1 day, you would have loved it. You would have absolutely loved it. And then I promise you it gets past the veto process. What do you think?
So that's pretty much exactly where my head's at. If that would have been 2 or 3 candles into that, we'd probably all really like it. I could completely understand if that red candle does scare somebody off. Like I said, I'm a wimp, so I can't judge other wimps.
It was market though. It was broad market.
Yeah, exactly. And I think that would really be the debate side of things. So yeah, if
that one candle, which was based on no news, just market action, if that one candle was 3 days orderly price down, we would have a different read on this.
So yeah, and I do like this area, which is certainly my bias. This is one of my favorite technical areas going into the first part of next week.
Well, and you brought this guy up before. I mean, this is one of your stocks that you keep track of.
Yeah, I really like some of these chemical companies because they behave pretty nicely and
specifically. You look at basic materials in general, you kind of see a very similar pattern here. Blow that top off, quick retracement back down into the breakout channel.
Exactly.
The material space was a space that, in looking at all of these sectors, I mean, communications technically right now is just very, very challenging, and that's the easiest way to say it. Energy, somebody find me a good technical chart on energy outside of 1 or 2 of them. Finance is setting up. You break above 26 on finance, I think you do have some room for price appreciation there. And I love the defense that finance in general has played in the last couple days. So that is an area that I think we could be looking at this week. Industrials, snapback retracement, trying to hold on to that 20-day moving average in a very, very precarious moment. We broke down technology in great detail here today. We all see it as a buying opportunity, but support has to hold there. I'm looking at all of these areas of the market, and technically speaking, I don't see a better just pure technical setup than in the material space. Now, this is not a perfect setup because there is no perfection right now, given what the market's done in the last 3 days. But I actually really like the material space, and specifically with a lot of those gold mining companies, silver mining companies, kind of in some degree of stagnation, setting a support. If support holds, that could really hold them up. But Frankie, those chemical companies that you were kind of talking about, that those have been kind of the leaders in this space to a certain extent.
Yeah, they've been very, very strong. I've, and I'll run with it until it quits. And so that's, I'm going to gravitate towards these charts that held up, right? The tougher ones, something new will develop. I'm going to continue to kind of stick in those areas. I agree with you. I think, materials, probably my favorite setup. I do really like financials if we can get above that 200. I also like the staples ETF as well. So those are probably some of my favorite areas going into at least the beginning part of next week.
Hammer candle right there as well.
What about, I'll give you a stock, because one thing I've been playing the last couple of days is some of the reopening plays. So what about a company like CCL? Carnival. And I mean, we're seeing, and we've seen this the last 2 days in this violent sell-off. Your Boeings and Planet Fitness and your, Carnival. I mean, they haven't been doing too bad. They haven't been doing too bad, as there's been a little bit of rotation. Now it's hard to trust, right? But a lot of vaccine news. There's a lot of vaccine news, and I can see that giving these companies a nice bit. But what, from a technical perspective, what do you see?
I have a hard time seeing a trade here, honestly. I could see a momentum above the high of the previous 2 days, targeting $20, stop loss. If you're actually putting a stop loss where you should underneath, say, that 17 level. So I think you can map out a trade here. It's just, this space has been fairly choppy for me. And the way you play it, I mean, it's a different beast. You're looking at selling naked puts at support levels well under, versus when we're in that scanner report meeting, we're looking at it from a directional perspective. And I just think, I don't want to put words into Frank's mouth, but I'm going to try. Frank, doesn't this need time to cook here? And
yeah, I would probably go more towards the restaurants on the reopening plays personally. I mean, I see what you're seeing there, Mark. We are seeing some constructive price action.
All right, what about cake? Pull up cake.
Cake. I've been a Bloomin' and a Denny's guy. Cake's been strong.
Yeah.
But yeah, Cake's looking pretty strong. Denny's actually having a decent pullback today after a break, although it's a big red candle, so that one's going to need time to cook. That's DENN. If you don't know, I worked at Denny's once upon a time back in college.
I worked at what was it, Banana Republic, for 2 hours one time.
Yeah, you were a terrible employee.
I was the worst employee of all time.
He couldn't figure out how to fold pants the Banana Republic way, so they sent him packing.
I did. I really needed Frank bringing that one up today. That was fantastic.
Yeah, that's what I'm here for. So I get it, Mark, but I'm not on board. Like I said, with Matt, kind of saying, with the selling naked puts and stuff, but that's not really what I'd be looking to accomplish there. And so I'll probably go with things that are interesting. Now, if you want something in the reopening, what about Wyndham, WIND?
I saw that one, Frankie. I'm glad you're bringing this one up.
Yeah, I thought that.
Yeah, and I mean, there's clear resistance on this, which is what I like. I think you'd have to map out reward to risk. I mean, I see the opportunity on a breakout there at 20 or 30. What is that? 32 right 32. There. Yeah. Matt, what do you think of this one? I saw this one and grabbed my attention.
I think out of all the charts we've looked at here since Mark asked the question, I think the Wyndham chart is the cleanest chart to map out a entry versus stop versus target. You're obviously going to have a positive reward to risk ratio because you'd be targeting at a minimum above 34 there.
As it is right now, you could almost put your stop loss below today's low with the target of 200 and make it work. It's going to be probably a hair short of 2-to-1 if you do that, but I think you can map something out here.
Which I do think those are your targets, or 34 by 200 at that $35 level.
Yeah, so I think 35 is a very, I think getting too aggressive in this space.
Level.
is tough. But yeah, I think if I'm looking for something, I still want things that are at least a little, to me, more clear on the technical side. This
Yeah.
is something that, forget about who it is and what they do and why I might be interested in this space right now. We've got a potential triple bottom, W type of breakout pattern, hasn't broke yet and may never break, right? How shocked are we going to be if these guys can't get above that resistance? I mean, shouldn't be all that surprised. So that's probably where I would lean, Mark.
I think, Chucky, to answer the question, I think this space could see some price appreciation. There's no doubt about that. But as an active trader, from looking at it from a purely technical perspective, I think they're technically very challenging right now.
Yeah,
Now, Wyndham, I think, is a little bit cleaner than the rest.
Yeah, and that's probably why I prefer it. Although I have kind of taken the cruise ships, and they don't exist to me. So
yeah, I'm assuming.
I mean, I'm not a bull. I'm not on board with playing them. Period, bull or bear. Just not my cup of tea.
Okay, any more charts there?
Man,
you like the reopening stocks, Mark, right?
Oh, I sell a ton of naked puts on the reopening stocks.
Yeah,
Again,
I'm more directional, so it's
yeah. I mean, you can't. It's just a different analysis when you ask me and Frank to break it down from a swing trading perspective.
Well, I mean, what I was really curious, because if you thought there was a good technical setup and it was going to take off, like, because the one thing I don't want to be left behind and not get any reopening stocks and own some shares.
Oh,
and so, like,
Mark, I think the highest probability in all of those stocks we looked at was greater price appreciation. I think there is an argument on that side of the fence. But from an active trading perspective, the charts it's a little bit difficult to really kind of map out entry versus stop versus target.
And the thing about it, with this nasty weeks of price action is that, cake isn't perfect, right? Carnival isn't perfect, but these stocks have held up really well this week.
Yeah,
and I mean, guys, and again, you can answer for yourselves there, but when I veto something in the scouting report, let's say Frank puts out a bullish trade and I veto, it doesn't mean in any capacity I don't think the stock's going to go up. I'm looking at it from a technical perspective, trying to be systematic in entries and stop losses and clean triggers and clean targets and cross comparisons against other stocks in that space to compare which one's better technically. I like, in all of these stocks, when you're looking at, Denny's or Cake, or, if we were to look at Dave & Buster's, I think the economy reopening up theme is starting to take hold. Take Wyndham, for example. Take any one of these stocks, for example, that we just looked at, with the NASDAQ down, 8, 9, 10% in the last 2 days? These have held up. I think that's a positive. So I definitely would agree with the edge is towards greater price appreciation, which helps your economy reopening up play you're looking at making. I just don't see them being a clean trigger to the upside outside of Wyndham, and that's why they would have been vetoes for me.
Yeah. Would you consider Six Flags a reopening, Mark?
Oh yeah, absolutely.
I would.
But what do you think of that chart? I think maybe we could talk a little bit. We did see some pretty nice move off of that break of resistance. Held up, like I said, much like many of these plays this week, held up, relatively speaking, better than the rest.
Can I break it down technically?
Absolutely.
Okay, so this is how I look at it technically here, and this is why I'm a little bit more excited on Six Flags than some of the other plays we just looked at. Number one, you had a tremendous downtrend in the last 6 months on Six Flags, but even before pandemic, you had a fairly substantial downtrend there. So looking at this now from just a short-term price action, preceding trends were bearish. Now we're looking at a scenario where you have a lower high, lower low right here, right there, and we'll give that an 1870 just number there on that support level. You ultimately set that next lower high right there at 21.5. Now, you then violate the support level, setting a new lower low right there at 1630. But then in the retracement, no bearish retracement established itself, and the market actually came back up into that exact same 2130 by 2150 level that we saw in the previous retracements, which coincided with the 50-day moving average. Well, where does it come down into? It comes down right smack dab into the exact same left shoulder, now a 20-day moving average that is now acting as support level, and you now ultimately break out of that, establishing a new higher high at 24, followed by the first retracement off a head and shoulders reversal pattern. Now you're sitting as support with a hammer candle. What's there not to like there on that technical setup, guys? If you're looking at finding something that is distressed and you're looking at it from a technical perspective, how do you not like this here?
Yeah,
Should
and
under $20.
It's a good setup, and I like the space right now. I think there's a lot of genuine sentiment shifting towards this space right now.
Mm-hmm.
And I like a close above 22.5 as a trigger.
Yep.
Yeah, that definitely caught my eye.
And a stop under 2078. Yeah, I like that one, Frank. The more I look at it, the more I like it.
Yeah, you sold me on it. All right, let's do one more bull and then a couple bears, and then I'll shut up. Cause no, we're running out of time. Nomad, ONMD.
Mm-hmm.
Ooh, the only question I have is, do you care about the wick?
The $1 million question, right? That's why I try to find things that don't have it. Sometimes it's easier than others. It was very brief. It did not was not up there for too particularly long. So that's a tough one. That's a tough one. I think for me, yeah, I think I would probably want to close above my black resistance line and see follow through the next day. So I don't think for me this would be, granted that's my general rules outside of high bases on breakouts. I would probably need to see a close and then the follow through.
So Frankie, how about this? Close above 25, trigger above the high of that day.
Yeah, that's kind of where my head would be.
You treat it momentum style, right?
Yeah,
close
exactly.
above 25, trigger above the high of the day. You only get in with additional momentum.
Yep, that's exactly how I would look at it.
And
that's kind of my default breakout rule anyway.
Yep.
All right, a couple bears. I mean, if the market keeps selling, everything's going down, right? But you still want your technicals to look good. What about FLIR? FLIR.
I saw FLIR as well. I love these charts, Frank. By the way,
I appreciate it, Tim. Yeah, a little cup and handle, just been drifting down and down and down, right? Not a lot, if this zone gives out, anything can turn to support, but they got a little bit of room to run to the downside.
$35. You know what they say, Frank? Every time it goes under 35, it goes to 30.
It's just a matter of time.
it's a magnet. I like it.
You guys say that so often. My new joke is every time it goes to 35, it goes 34 to 70.
Yeah, because we've been saying it as a joke. Did you just figure that out?
Yeah, so
I think you just figured it out.
But I don't know the origins of it. I think
the origins of it is making fun of other people who said it when it breaks out of 90, it always goes to 100.
Yeah, I don't. Yeah, the exact origins I don't recall, but that's the gist of it. Yeah,
that's when we started making fun of it.
I want a criminal. I want to point to someone. Can we just blame Dave Portnoy for all life?
I don't think he brought that one up.
I think we can blame Cody since he had to step away. We'll blame Cody.
Yeah, it's Cody's fault.
Cody's fault. Yeah, I like that FLIR setup though, Frankie.
Yes, real clean, pretty easy to map out a risk to reward trade that I think you'd feel pretty satisfied with. So and it's tough. It's tough. The funny thing is, it's tougher to find bears after a deep sell-off, right, than it is any other time, because it's any retracements are gone. One more. I think I like FLIR better, but EXAS. One more to look at. So not as developed, but certainly every bit as weak. Certainly not been lighting the world on fire. Putting in a floor over the last week and a half, and maybe that floor wants to hold. I'd be thinking that floor is to break before any signals could be generated.
I would say I would say on this one, on the other one, when we're looking at floor, Frankie, I honestly think anything under 35 with a stop, anything above 35 is your approach on that.
Yeah, FLIR was my favorite
I
technical
really
bear
like that
setup that I found.
Bear setup, and so I think you could be a little bit more aggressive with the stop above 35 on that one. This one, I just feel like, and maybe this is just more of a feeling, but I do like the low base coming into it. I like the 9 EMA pressuring it. I got to see it close underneath 71.5 here. And then it's off to the races to the downside. And I think the difference is 71.5, maybe it doesn't have the significance of a 70, whereas 35 does. But you also have a little bit of chop between the bodies and the wicks on this one.
Yeah, there's a little more chop in there for sure.
And so I think because of the additional chop in the entry, I think you got to see it close on instead of just getting whipsawed on a wick, right?
Yeah.
So I like the aggressive style on floor, like the little bit more conservative wait for a close on Exact Sciences.
Makes sense. Makes sense to me. What about energy as a whole, XLE? I mean, we're hanging out on support. I mean, much like crude, I've just ignored energy for quite some time. Not bullish, not bearish, just leave me alone. But we're seeing some weakness, in crude, and in some of these energy stocks. Like I said earlier, it's real tough to find a bullish setup in energy, and it has been for a bit now. Just generally speaking, within this space, as we go into next week, is this a potential area? If we were to break with this, or crude was to break, is this much the same crude analysis for you, Matt, where you want to see the break retrace, or would you be open to, if the setup was right, into price?
I'm open to the setup, like in the energy space. I'm certainly open to the setup. I think you got to downgrade energy as a collective this week. I mean, there's a lot of support levels here we got to look at that are some more important than others. But I think you got to call what happened on Tuesday of this week, a breakdown, even though it's not ferocious by no means. I mean, it did violate that support level right there at 35.50, 35 being the next support level that it's trying to cling on to. Looking at on a weekly chart here, you kind of see that, obviously this was the V shape coming out of the pandemic, but it's been just stuck in the mud here forever. I mean, you guys should always tell what interests us, obviously, based on what we're talking about in the halftime report.
Yep.
And I think we spent like less than 1% of any conversation in the halftime report in the last like 2.5 months on energy, because it's just a really, really boring space. But you're now starting to see breakdowns on daily charts. You're also now starting to see that 35 level on the weekly chart that is clinging to life support in the energy space. And so, yeah, Frankie, I mean, looking at this space, with crude, fool me once, fool me twice type philosophy right now. That's why I got to see that confirmation of the trend. But in the energy spaces in general, this has been a space that was historically weak before the pandemic in comparison to what the market was doing. And so it's obviously trailed the market during the market recovery as well. Now you're starting to, hit into that very, 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 very important support level of 35. If it can't hold, Frankie, yeah, I think you can look at individual components and not wait for that retracement here.
That's kind of where my head was as well. I've just not thought a lot because it's given me no reason to think about it forever, right? So, now I have to think about it. So I'm excited to get I'm excited to get the take of the other coaches because it really has.
It's amazing, Frankie. Energy's been beat up so heavily over the last few years in comparison to the market. And then all of a sudden the market wakes up and shows a little bit of volatility in 2 days. And it's the first area we're like, let's go hit energy again.
Yeah, there you go. Yeah, there you go. We love energy.
Man. It's like technology's it's like technology's your favorite child, but you just don't dare to admit it. And it's like, let me go yell at energy for a little bit. Ridiculous behavior, but it is what it is. Oh, Tesla, I had to bring up.
Get the fibs off that beautiful chart.
It's not going to happen. Not going to happen.
Dude, what do you have against
fibs? You don't like what I was saying. You don't like what I was saying. Are you kidding me? It is marching to 420 before the close.
Dude, what do you not like about fibs?
Dude, Fibonacci retracements are powerful. I don't care what you say.
Dude, algos use them incessantly. What do you got against fibs?
He hates Elliott wave theory.
Well, that's a whole different complex theory. I can understand why, it's that, but
I will hold my opinions to myself on this one. Matt's heard my rant many, many, many times at the back end of a show on a Friday. We're having fun here, Mark.
It starts with fairy tales.
It's Fibonacci Friday. Come on.
And I think there's some Illuminati in his rant regarding Fibonacci. So you guys can go Google it.
Yeah. It is trying to push up though here, Matt, intraday, even on tech and everything. Tesla's trying to hold that little channel. And that's the thing about,
420. What does this candle look like at 420? Ooh,
looks like a hammer.
Looks like a hammer, baby.
Yeah. Yeah, it's setting up nicely. I actually like Tesla. It's going to be on my watch list for next week. There's no doubt about it.
Even though the 90 EMA is actually 430, but it didn't go with the joke of 420.
That's right. That's right. Boys, Mark, you've got a webinar here in about 20 minutes for our pro members that weekend, kind of prep that you do. Friday at the Market Bell, I think is what you call it, where you kind of go through and answer questions and whatnot. That's going to be 3 o'clock Eastern Standard Time.
I'm trying to get my lunch really done ready, so I'm ready for it.
Just open a can of those sardines.
What?
Crackers and sardines, bro.
No, leftover sushi from last night. So
Ooh.
that is what I'm having.
So. Okay. That feels a little bit more risk than I would want to take.
Yeah.
Yeah, that's like, what would that be the equivalent of buying what instrument right now?
Oh,
I need to know what instrument is he buying on the big red candle?
The conservative trader, always doing low deltas, willing to take a chance on second day.
Is
sushi.
he buying the out of the money call on Tesla right now with eating the can of sardines?
Not sure.
Is it that level of risk, or are we talking about buying? No, is he buying a $500 call option on Zoom right now?
He's buying one that expires here in an hour and a half.
Like,
He's got the Friday weekly.
Like
day of.
He's buying the 500 call option on Tesla today.
Sure.
Dude, the day I have a bad experience with leftover sushi in the fridge is the day I'll stop doing it. But listen, trust the trend. It's treated me well.
It's treated you well for a long time. I do love sushi, Marky, though. So maybe I might have to find me a little sushi lunch at some point. Let's start getting some final thoughts here, wrapping up this show on a Friday. Frank, it's always great to have you coming on in here and appreciate you bringing those charts. If you're out there watching our show right now and you love the halftime report, everybody just say thank you to Frank, because I do appreciate it, Frankie. It's always fun for me to kind of break those charts down with you.
Hey, my pleasure. Love doing it. So thank you for having me, and enjoy your 3-day weekend. The big takeaway, don't feel like you've got to chase anything. There's always another trade, right? And so you don't feel like you have to, go crazy just because whatever side you're on, right?
Mm-hmm.
Follow your rules. It's easier to say than do sometimes. I understand that, but that's why they're your rules, right? So, but enjoy your weekend. If you need some insurance, get some insurance so you can enjoy your weekend. I think, so we were talking in the chat a little earlier about insurance. I'm like, I just hold insurance over the weekend. I don't really think that I need it, but I know I'll enjoy my weekend more if I don't close out of those cheap spreads. So, that will be my stance probably.
Mm-hmm.
Matt, I have one last thought. Kane, if you want your entire life just to be better, stop trying to analyze the VIX. Your entire life will be better.
Yeah, and
that's like trying to make meaning of something in every aspect. There is no meaning to the VIX. It has been dead and buried for literally 6 years now. 6 years. It's a dead instrument.
Mm-hmm. Mm-hmm. And these VIX ETFs, Matt, they can pull people in. I remember, UVXY, for example. I've heard traders talk about that one in the past. I'm like, good luck. Good luck trying to do that product. And it's not a product that I prefer. Matty, final thoughts from you, sir, as we wrap up our week.
Big days happening over the last couple hours, and all of the emotion, and you're like, oh my gosh, what can I do? It can be crazy on the emotion, right?
Mm-hmm.
You'll get used to it over the months and the years, and days like the last couple of days, they suck, and they suck no matter what your experience is. The difference is, what are you doing when that real negative emotion hits? Are you making impulsive decisions? Are you panicking? Or are you logically following a trading plan that you've developed over the months and the years? If you're new, you'll get there. I promise you. Just stick with it.
Mm-hmm. It's going to be an interesting last hour and 15 minutes. That 2 o'clock bell, I think a lot of people are looking forward to it.
We're on rally mode the last hour.
Yeah, we are.
A little higher pivot low in the intraday.
Poking around. Yeah, I've been poking around.
Yeah.
Awesome.
The close is more important than the open.
Well,
obviously.
Yeah, sometimes. But looking at this, kind of what we were talking about, guys, this is what everything Frank and I were talking about earlier today when we were breaking it down on the 5, 15, and 30-minute chart. You're starting to see, as that 5-minute chart rolled over, you're starting to see that 15-minute chart start to form that support level we talked about right there at 3,400. That held. You then saw the breakout. And now what are you looking at? Not only are the 5-minute charts lining up, the 15-minute charts are lining up. Look now at that 30-minute chart, that ultimate chart I'd like to look at for potential reversal patterns and triggers and stop losses. Saw that also held. That bearish retracement failed. It tried, it failed. It failed because the 15-minute chart rotated. Now you're breaking out and you're trying to reclaim those highs. It would not surprise me to see this continue to ramp into the close and maybe even show a green day today.
Not at all. Not with the way it's looking right now. You know, unless people are saying, "Oh goodness, we got a chance to get some of this back from yesterday. Let's close it before the weekend." But yeah, that's a very impressive move thus far.
Listen, if I'm running a hedge fund on Wall Street, I am wiping my hands from today and I'm saying, bring on the 3-day weekend. I am done with the market.
I agree with that. Yeah. But here at Tackle Trading, we actually got, some work we got to do out there for our community here. And we do those on Fridays. We have our scouting report planning meeting where we're going to go through. It's going to be a bigger challenge here today, guys, ranking these sectors. Matt, we're finally getting a little bit of action across them. It's going to be a fun conversation. Looking forward to building some watch lists for our weekend reports as well. And if you remember, Wednesday we had a Tackle 25 programming mishap. I had a coach that didn't identify the schedule. We did reschedule that for tonight. So if you are a Tackle 25 member, a cover call trader, and you want to join us tonight at 8:30 p.m. Eastern, Coach Tyler is going to be holding that mastermind group here tonight. Marky's here live in a few minutes. The rest of us are going to be working on our scouting reports and bird dogging for you guys out there. I really,
Tim, one last thing.
Yep.
Oh, go ahead. You had one last thought you were going.
No, I just really enjoy coming in and, analyzing markets in conditions like this. And, I was writing about this in the daily email the last couple of days. Guys, you're going to have volatility in markets. I saw somebody said something earlier. I'm new to the market in 6 months and never experienced anything like this. Well, I mean, that's where learning comes. Sometimes you've got to live through a couple of days.
How awesome is it for a new trader 6 months into it, just learning in this type of time frame, and they were aware enough to realize, hey, this is something that is new to me, instead of panicking and freaking out and end of the world, or just blindly just go gamble all your money. This is something new to me. Let me step back, let the battle happen, and then come back into it. I absolutely loved it. I thought it was the absolute number one most appropriate response they could have had to the situation.
Yeah, I agree. I was very impressed by that. And that's the kind of mindset we want. You got to be open to learning and adjusting and adapting. And you're in the right place if you really just want to try to understand the markets here with Team Tackle. That rally is accelerating on the
Listen, if you're a bull, as we all are, okay, all of us are bulls. If you're a bull and you were worried about the last 2 days, you're getting everything you needed to see to have a great Labor Day weekend right now.
For sure. Yeah, for sure.
There were going to be a lot of bulls sweating tears and blood a little bit over this 3-day weekend. And anything can happen. Hold on. Anything can happen. It's a long weekend and the market's not out of the woodwork yet. I'm just saying, when we talked about this technically yesterday, when we broke it down today from a technical perspective, this is what you're looking to see in these type of buy the dip mentalities.
Mm-hmm. Yeah, it's very constructive price action.
Close your kids' ears for what I'm about to say. This is Wall Street. We don't want to worry about this shit over the next 3 days rally, right? So that's what this is.
Yeah. I had a lot worse in my mind.
I thought it was like
I was prepped.
I was getting our lawyer on the phone. I was like, do I need to worry about this?
Yeah. Because if Mark gives
every time he does that,
you never know.
I always say the bad stuff when I don't realize I'm doing it.
Really, yeah. That's worse is when he doesn't disclaim. That is true.
All righty, boys, let's wrap this one for the week. Great job out there, everybody in Team Tackle. Keep approaching the markets from a rule-based, kind of situation. Try to keep the emotions out as much as you can. We understand. We have empathy. Those emotions are real, and especially on days like the last 2 days when markets are going crazy. It's easy to let those emotions creep in, but that's where your trading plans come in. Do the best you can to focus on that. Stay rule-based and all that kind of stuff. We have Mark. You'll be live here in just a few minutes, I'm guessing, and you'll let everybody know when you go. You got your lunch in, and then we do the thing tonight. Other than that, guys, we'll be back on Tuesday. We are not live on Monday with Labor Day, obviously. Markets are closed, so we won't be here. We will be doing a podcast on Monday as well, though. But
and if you need something to do while you're doing whatever you're doing over Labor Day weekend, make sure to drop that, give that 3-hour marathon we did on Monday podcast. Make sure to give that a nice little listen.
Dude, that was fun.
And if you don't listen to all of the 3 hours, that's okay. Just make sure you download, subscribe, and give us a 5-star review. It's always appreciated.
Yeah, absolutely. Absolutely. Yeah, that was a fun one. That'd be a good one. Cleaning the garage tomorrow or something like that. That'd be a good one to turn on. Guys, we're out for the weekend. We will see everybody on Tuesday for the halftime show.
Have a great weekend, everyone.
In a few minutes.